나아갑니다. 숫자를 다루지만 계산적이지 않은 금융으로 자본을 키우지만 세상을 키우는 금융으로 KRX, 우리는 금융의 내일로 나아갑니다. 폐허 속에서 희망을 보고 IMF 위기와 글로벌 금융위기 속에서도 기회를 발견하며 KRX는 대한민국 자본시장의 발전과 함께해왔습니다. 때로는 걸림돌도 있었지만 KRX는 장애물을 디딤돌 삼아 세계 최고 수준의 글로벌 종합시장으로 성장하였습니다. 그리고 이제 또다시 변화의 문 앞에 서 있습니다. 산업구조의 변화와 세계거래소와의 경쟁에 따라 우리는 다시 한번 혁신의 문을 엽니다. 거래 편의성을 높여 시장 본연의 역할을 강화하는 자본시장으로 비즈니스 영역을 다변화하여 미래 성장 동력을 육성하는 자본시장으로 해외 진출을 넓혀가며 글로벌 선진시장과 어깨를 나란히 하는 자본시장으로 그렇게 KRX는 한 걸음 더 전진하고 있습니다. 당신의 내일을 위한 마켓 프론티어 KRX, 당신과 함께 금융의 내일로 갑니다. 세상에 가치를 더해가는 금융혁신 플랫폼 KRX 한국거래소.
(1956년) 대한증권거래소 설립. 희망과 기회를 거래하는 자본시장을 개설하고 불굴의 의지로 대한민국의 경제성장과 함께해온 KRX. 세상을 키우는 한 걸음 한 걸음 희망찬 내일을 꿈꾸며 나아갑니다. 대한민국 금융혁신의 길, 한국거래소 KRX. KRX는 자본시장의 환경 변화에 맞춰 새로운 비전으로 증권 파생상품 시장의 내일을 준비합니다. 세상의 가치를 더해가는 금융혁신 플랫폼 KRX. 시장 본연의 기능을 강화해 시장의 질서를 투명하게 하고 효율적이고 안정적인 자본시장 운영으로 신뢰를 쌓아가는 KRX. 새롭고 다양한 비즈니스 발굴로 금융산업과 국가경제의 미래 성장 동력을 키워내고 금융소비자의 다양한 요구에 공감하며 소통에 앞장서는 KRX. 발을 넓히고 해외 거래소 등과 제휴 협력으로 KRX. 신뢰와 소통, 도전으로 이어지는 금융혁신의 길로 오늘도 나아갑니다. 자본시장 혁신의 무한한 가능성을 믿기에 금융의 내일을 향해 달립니다. 세상의 가치를 더해가는 금융혁신 플랫폼 KRX 한국거래소.
나아갑니다. 숫자를 다루지만 계산적이지 않은 금융으로 자본을 키우지만 세상을 키우는 금융으로 KRX, 우리는 금융의 내일로 나아갑니다. 폐허 속에서 희망을 보고 IMF 위기와 글로벌 금융위기 속에서도 기회를 발견하며 KRX는 대한민국 자본시장의 발전과 함께해왔습니다. 때로는 걸림돌도 있었지만 KRX는 장애물을 디딤돌 삼아 세계 최고 수준의 글로벌 종합시장으로 성장하였습니다. 그리고 이제 또다시 변화의 문 앞에 서 있습니다. 산업구조의 변화와 세계 거래소와의 경쟁에 따라 우리는 다시 한번 혁신의 문을 엽니다. 거래 편의성을 높여 시장 본연의 역할을 강화하는 자본시장으로 비즈니스 영역을 다변화하여 미래 성장 동력을 육성하는 자본시장으로 해외 진출을 넓혀가며 글로벌 선진시장과 어깨를 나란히 하는 자본시장으로 그렇게 KRX는 한 걸음 더 전진하고 있습니다. 당신의 내일을 위한 마켓 프론티어 KRX 당신과 함께 금융의 내일로 갑니다. 세상에 가치를 더해가는 금융혁신 플랫폼 KRX 한국거래소
1956년 대한증권거래소 설립. 희망과 기회를 거래하는 자본시장을 개설하고 불굴의 의지로 대한민국의 경제성장과 함께해온 KRX. 세상을 키우는 한 걸음 한 걸음 희망찬 내일을 꿈꾸며 나아갑니다. 대한민국 금융혁신의 길 한국거래소 KRX. KRX는 자본시장의 환경 변화에 맞춰 새로운 비전으로 증권 파생상품 시장의 내일을 준비합니다. 세상의 가치를 더해가는 금융혁신 플랫폼 KRX. 시장 본연의 기능을 강화해 시장의 질서를 투명하게 하고 효율적이고 안정적인 자본시장 운영으로 신뢰를 쌓아가는 KRX. 새롭고 다양한 비즈니스 발굴로 금융산업과 국가경제의 미래 성장 동력을 키워내고 금융소비자의 다양한 요구에 공감하며 소통에 앞장서는 KRX. 발을 넓히고 해외 거래소 등과 제휴 협력으로 KRX. 신뢰와 소통, 도전으로 이어지는 금융혁신의 길로 오늘도 나아갑니다. 자본시장 혁신의 무한한 가능성을 믿기에 금융의 내일을 향해 달립니다. 세상의 가치를 더해가는 금융혁신 플랫폼 KRX 한국거래소.
나아갑니다. 숫자를 다루지만 계산적이지 않은 금융으로 자본을 키우지만 세상을 키우는 금융으로 KRX 우리는 금융의 내일로 나아갑니다. 폐허 속에서 희망을 보고 IMF 위기와 글로벌 금융위기 속에서도 기회를 발견하며 KRX는 대한민국 자본시장의 발전과 함께해왔습니다. 때로는 걸림돌도 있었지만 KRX는 장애물을 디딤돌 삼아 세계 최고 수준의 글로벌 종합시장으로 성장하였습니다. 그리고 이제 또다시 변화의 문 앞에 서 있습니다. 산업구조의 변화와 세계 거래소와의 경쟁에 따라 우리는 다시 한번 혁신의 문을 엽니다. 거래 편의성을 높여 시장 본연의 역할을 강화하는 자본시장으로 비즈니스 영역을 다변화하여 미래 성장 동력을 육성하는 자본시장으로 해외 진출을 넓혀가며 글로벌 선진시장과 어깨를 나란히 하는 자본시장으로 그렇게 KRX는 한 걸음 더 전진하고 있습니다. 당신의 내일을 위한 마켓 프론티어 KRX 당신과 함께 금융의 내일로 갑니다. 세상에 가치를 더해가는 금융혁신 플랫폼 KRX 한국거래소
1956년 대한증권거래소 설립. 희망과 기회를 거래하는 자본시장을 개설하고 불굴의 의지로 대한민국의 경제성장과 함께해온 KRX. 세상을 키우는 한 걸음 한 걸음 희망찬 내일을 꿈꾸며 나아갑니다. 대한민국 금융혁신의 길 한국거래소 KRX. KRX는 자본시장의 환경 변화에 맞춰 새로운 비전으로 증권 파생상품 시장의 내일을 준비합니다. 세상의 가치를 더해가는 금융혁신 플랫폼 KRX. 시장 본연의 기능을 강화해 시장의 질서를 투명하게 하고 효율적이고 안정적인 자본시장 운영으로 신뢰를 쌓아가는 KRX. 새롭고 다양한 비즈니스 발굴로 금융산업과 국가경제의 미래 성장 동력을 키워내고 금융소비자의 다양한 요구에 공감하며 소통에 앞장서는 KRX. 발을 넓히고 해외 거래소 등과 제휴 협력으로 KRX. 신뢰와 소통, 도전으로 이어지는 금융혁신의 길로 오늘도 나아갑니다. 자본시장 혁신의 무한한 가능성을 믿기에 금융의 내일을 향해 달립니다. 세상의 가치를 더해가는 금융혁신 플랫폼 KRX 한국거래소.
나아갑니다. 숫자를 다루지만 계산적이지 않은 금융으로 자본을 키우지만 세상을 키우는 금융으로 KRX 우리는 금융의 내일로 나아갑니다. 폐허 속에서 희망을 보고 IMF 위기와 글로벌 금융위기 속에서도 기회를 발견하며 KRX는 대한민국 자본시장의 발전과 함께해왔습니다. 때로는 걸림돌도 있었지만 KRX는 장애물을 디딤돌 삼아 세계 최고 수준의 글로벌 종합시장으로 성장하였습니다. 그리고 이제 또다시 변화의 문 앞에 서 있습니다. 산업구조의 변화와 세계 거래소와의 경쟁에 따라 우리는 다시 한번 혁신의 문을 엽니다. 거래 편의성을 높여 시장 본연의 역할을 강화하는 자본시장으로 비즈니스 영역을 다변화하여 미래 성장 동력을 육성하는 자본시장으로 해외 진출을 넓혀가며 글로벌 선진시장과 어깨를 나란히 하는 자본시장으로 그렇게 KRX는 한 걸음 더 전진하고 있습니다. 당신의 내일을 위한 마켓 프론티어 KRX 당신과 함께 금융의 내일로 갑니다. 세상에 가치를 더해가는 금융혁신 플랫폼 KRX 한국거래소
Before we begin today's conference, we had a tragic accident 2 days ago in Itaewon and many lost their lives, and we extend our condolences to the families of the deceased and wish the victims rest in peace. So we will now pay a moment of silence.
바로 국가 애도 기간
The state has designated this week as a week of condolences, and thus, for today's conference, celebratory events, including VIP ceremony, have been cancelled, with the number of audience reduced as well. I would like to ask for your kind understanding. Now let us open the Global ETP Conference Seoul 2022 with an opening video.
네, 아시아 ETP 시장을 대표하는 국제 컨퍼런스 오프닝
So that was the opening video for Global ETP Conference Seoul 2022. So welcome to Global ETP Conference Seoul 2022, which is organized by Korea Exchange and sponsored by Samsung Asset Management, Mirae Asset Management, Bloomberg, London Stock Exchange Group, and S&P Dow Jones Indices, as well as domestic and overseas ETF and ETN issuers. This year marks the 20th anniversary of launching ETF market in Korea, and to celebrate, we have invited representatives of global exchanges, ETF, ETN issuers, domestic and global index providers, institutional investors, and many other professionals in the ETP sector. And the theme of this year's conference is Possibilities and Challenges for the Next Decade, the 20th anniversary of Korean ETP market and its achievement. I'd like to ask for your active participation. And again, this year we're organizing the conference in a hybrid format, so we have participants on site and others joining us online. And the conference is being live streamed on YouTube, and we have a big turnout already. And some speakers and panelists from overseas will join us online as well. I hope that you'll find this year's conference meaningful and useful. Now, to represent the host of the conference, I'd like to invite Mr. Son Byung-do, Chairman and CEO of Korea Exchange, for opening remarks.
I will take off my mask before I make my remarks. As was just introduced, my name is Son Byung-do, the chairman of Korea Exchange. I would like to pay my condolences before I begin the remarks. We've had a tragic accident last weekend, so I would like to ask for a quick recovery of those that are hurt, and my condolences goes to those that passed away. The Korea's ETP market, which brought much innovation and the spirit of challenge into the capital market, is celebrating its 20th anniversary, and I'd like to welcome all of you to the 2022 Global ETP Conference Seoul. Vice Chairman Kim So-young of FSC was supposed to join us, but something suddenly came up and was not able to join us. We do have Chairperson Na Jae-chul of the Korea Financial Investment Association in presence with us, and I would also like to thank the asset managers, brokerage houses, and index providers for their cooperation in putting together today's conference. Which market in the overall capital market do you think is responsible for most number of innovations? I think it's the ETP market, and that is because most new products are created in the ETP market. Already this year, already over 100 new ETP products have been launched. So that's about 2 products per week on average. Product lineups have continuously expanded to include not just market representative products, but also international, thematic, and active products. ETP market size itself has also grown significantly. Since the market came into being 20 years ago, over 630 ETPs have been launched, and the net asset value has reached 77 trillion won. Despite the worsening macroeconomic conditions, ADTV has reached 3 trillion won, making it the 3rd largest market in the world after the US and China. For the ETP market to grow more substantially, what types of efforts would be needed? Recently, the global ETP market has been noticing the generation factor. The so-called MZ generation wants more active and flexible investment, while the baby boomer generation wants more stable income and streams. It's time to develop products that satisfy different needs of different generations. And good global marketing is also critical. The global ETF market's total net asset value is about $9 trillion, which is about 1,260 trillion won. And in order to attract more global funds, we will work to have more closer communication with the international pension funds and sovereign funds. We will also have to work to create proper ETP investment culture. The US ETP market is so successful because it is based on mature investment culture that values long-term investment. Of course, short-term high-risk products such as the leveraged and inverse products are necessary, but we also need to work to establish an investment culture that holds good assets for the long term. KRX would like to prepare for the next 10 years in anticipation of further growth of the market. We will provide more diverse products through institutional innovations. First, by relaxing restrictions on active ETFs and asset management, we will ensure that the asset managers have wider scope businesses as well as investment choices. And also in line with population aging, various income ETFs will be launched to generate stable income streams. Second, we will work to increase the brand value of Korean ETP market. International and local ETP market trends will be identified, and the needs of international investors will be carefully looked after and cared for. The Global ETP conference, which began in 2010, has contributed greatly in enhancing the presence of Korean ETP market in the global stage. Through more active communications with the industry, we will try to enhance the market status. More effort will be invested for investor education. As ETP investment through pension accounts has increased, we will increase the PR activities to promote long-term investment. Despite the global economic downturn, we will continue to exert efforts to make healthy market through balanced information provision and communication. The theme of this year's conference is possibilities and challenges of the next decade. And I think it's quite meaningful for us to prepare for the next 10 years as we are celebrating the 20th anniversary. Mark Twain has said that 20 years from now, you will be more disappointed by the things you didn't do than by the ones you did so. So throw off the boat lines, sail away from the safe harbor. So he has emphasized the need to sail away. Today, the KRX will begin to sail away for the next 10 20 years. I ask for your continuous interest and support for the Korean ETP ETP market. Thank you very much.
네, 손병두 이사장님.
That was Chairman and CEO Son Byung-do of Korea Exchange. So thank you very much for the opening remarks. So we also have a lot of expectations for the next decade of the ETP market in Korea. So this year we celebrate the 20th anniversary of ETP market in Korea, and we'll now take a look at the journey that it has taken to grow into what it is now. And you will learn about the first Korean ETF, Codex 200, Codex 50, and COSEF 200, as well as listen to congratulatory message from the index provider for the first international ETF issuer.
안녕하십니까. 삼성자산운용 대표 서봉균입니다. 한국거래소의 ETF가 상장된 지 20주년이 되었습니다. 진심으로 축하드립니다. 지난 20년을 통틀어서 한국 자본시장의 가장 큰 변화와 혁신은 바로 ETF의 상장이었습니다. 저희 삼성자산운용도 그 20년을 함께 했다는 것에 무한한 자부심과 영광을 느낍니다. ETF의 투명성, 황금성 등 다양한 장점들은 투자자의 저변을 확대시키고 투자 전략의 다양성을 높이고 있습니다. ETF는 앞으로도 향후 수십 년간 가장 중요한 투자 상품이자 투자 수단으로 성장할 것임을 믿어 의심치 않습니다. 저희 삼성자산운용은 한국거래소가 주도하는 ETF의 성장에 적극적으로 동참할 것이며 끊임없는 혁신과 연구 개발을 통해 기여할 것을 다짐드립니다. 다시 한번 한국거래소의 ETF 상장 20주년을 축하드립니다. 대단히 감사합니다.
안녕하십니까. 한국투자신탁운용 배재규 사장입니다. 먼저 대한민국 ETF 시장 개장 20주년을 진심으로 축하드립니다. 저는 20년 전인 2002년 우리나라 최초의 ETF를 상장하였습니다. ETF 시장은 미개 종목 약 3,600억 원에서 이제 620여 개 종목 75조에 달하는 시장으로 성장하였습니다. 최근에는 거래대금도 시장 전체의 40%를 넘어서고 있습니다. 주식, 채권, 실물자산, 인버스 레버리지와 최근에는 테마형, 액티브 ETF에 이르기까지 투자가들이 필요로 하는 모든 것들을 ETF로 제공하고 있습니다. 이 모든 과정에 저와 제 동료들 그리고 ETF 업계에 종사하는 분들의 열정과 금융당국, 거래소의 시장 발전을 위한 적극적인 지원을 통해 오늘날의 ETF 시장으로 발전하게 되었습니다. 앞으로의 또 다른 20년은 ETF가 투자가들의 평생 투자 파트너로 자리잡고 한국 ETF 시장이 세계적인 시장으로 성장하도록 노력하고 기원하겠습니다. 다시 한번 대한민국 ETF 20번째 생일을 진심으로 축하드립니다. 감사합니다.
안녕하세요. 기업투자자산운용 대표이사 김성훈입니다. 2002년 10월 저희 코세프 200을 포함한 4종목이 처음으로 상장되면서 ETF 시장이 열렸는데요. 이후 최초의 통화형 ETF인 코세프 미국 달러 선물을 출시하는 등 저희도 시장 발전에 앞장섰습니다. 우리나라 ETF 시장은 처음에는 주로 기관 투자가들이 참여로 성장했지만 최근에는 개인 투자자들이 적극 참여하면서 폭발적인 성장세를 보이고 있습니다. 앞으로도 ETF 시장 발전을 위해 투자자들이 다양한 요구를 충족시킬 수 있는 좋은 상품 출시로 계속 노력하겠습니다. 다시 한번 ETF 시장이 성인이 되었음을 축하드리면서 모든 투자자들이 첫 번째 선택이 ETF가 되는 날까지 저희 코세프와 히어로즈도 열심히 노력하겠습니다. 감사합니다.
Congratulations on Korea Exchange's 20th anniversary. This is Anita Mo, CEO of Hang Seng Indexes Company in Hong Kong. It is our honor for Hang Seng Indexes to take part in the Korea Exchange's growth journey since year 2007, the year that Hang Seng China Enterprises Index ETF first listed in Korea. Korea is an important market to Hang Seng Indexes, and we look forward to joining hands with Korea Exchange in the coming years to enrich the product offerings to serve the Korean investors. May the coming years bring more fortune and prosperity to Korea Exchange. Happy 20th anniversary.
네, 감사합니다. 이렇게
So those were the messages from the issuers that assisted the development and growth of the ETP market in Korea. Before we open the presentation sessions, I'd like to invite the VIP guests onto the stage for a group photo.
네, 2022 글로벌 ETP 컨퍼런스 서울 시작.
So this is the opening ceremony for the Global ETP Conference Seoul 2022, and the VIP guests are coming onto the stage for a group photo.
네, 앞서 이사장을 비롯한 영상을 통해서 만나본 내외 기빈 여러분들께서도 언급을 하셨지만
As just mentioned by the chairman of KRX, we are celebrating the 20th anniversary of the ETP market in Korea this year. And we are now taking the group photo. So the VIP guests will have their masks on for the photo.
네, 박수 한번 쳐주실까요? 네.
Please give them a big hand. So there will be another picture.
With our speakers in Korea and overseas. 자, 그래서 현장에 참여해주신 연사분들.
So with the panelists and presenters and those that are joining us online, we will now take a commemorative picture.
Photo shoot with invited guests, speakers and panelists. Please look at the webcam. 네, 카메라를 향해서 포즈를.
So if you could pose for the camera, we will now take the commemorative picture. And the theme of the conference is the possibilities and challenges for the next decade. We have 5 sessions here today, and there will be many interesting presentations and panel discussions.
네, 사이사이의 자리.
And so if you could all stand a little bit closer and face the camera. So ladies and gentlemen, we'll now take the picture. So if you could all applaud together.
This is end of photo session. Now you may return to your seats. 네, 이것으로 사진 촬영 마무리하겠습니다.
So this concludes the commemorative picture taking. If you could go back to your seats.
대회식을 마무리하고
Now we are going to take a 10-minute break, and after a 10-minute break, we are going to begin the first presentation session. Thank you.
네, 여러분께 안내 말씀드립니다. 본 컨퍼런스의 이제 첫 번째 세션을
Ladies and gentlemen, we begin the first session of today's conference. I would like to ask those that are still outside to please make their way to their seats.
conference. Please enter the hall and take your seats. Thank you. 네, 그리고 거듭 광고 말씀을 드리면
And we have ETP issuers as well as the asset managers have their booth in the room just next to this conference, and this will be an excellent opportunity to talk to the experts. I would like to ask you to visit the booth during the break time. Thank you very much.
네, 여러분 이제 바로 세션
Ladies and gentlemen, we now begin session number 1 of today's conference. The first session is entitled Korean and Global ETP Market Trend. And we will have presentations and panel discussions for the session. And the first presenter is Executive Director of Korea Exchange, Mr. Young-hoon Song. He's going to talk to us about the 20 years of the Korean ETP market changes and challenges. So, ladies and gentlemen, please welcome Mr. Young-hoon Song. I would like to extend my greetings first. Good morning. As was just introduced, my name is Song Young-hoon, Executive Director at Korea Exchange. I will be the first presenter of session number 1. As our chairman has said, I would also like to extend my condolences first before I begin my presentation. Today, I'm going to talk to you about 20 years of Korean ETP market. I am going to talk about how it grew for the past 20 years. And I would also like to talk about meaningful changes that took place in the year 2022. And lastly, I'm going to talk about the major initiatives that the KRX is currently involved in. The Korean ETF market for the past 20 years has been growing steadily. And if you look at the past 5 years, there has been very remarkable growth. First, If you look at the number of listed ETFs as of September, there are over 622 ETFs that have been listed, and that's about twice as many as 5 years ago. And in terms of AUM, well, the AUM has also grown by 100%. The ETP market growth is a global phenomenon. It's not just limited to Korea. And the number of ETPs in the past 5 years has grown by 60%, and AUM has grown by about 70% in the past 5 years. So compared to the global market, you are able to see that the Korean ETP market has grown very quickly. And the market, with the increased market volume, the issuers and the asset managers that are involved in the market has also been increasing. As of September, there are 22 AMCs that are issuing ETFs in Korea. And with the BMK included coming in last week, we now have about 23 issuers or asset managers in this field. And as for ADTV, if you look at the past 5 years, it has grown by about threefold. And so there is a very, very active trading of ETFs. And with the increasing volume, and we have seen the Korean ETP market in enhancing its global status in terms of AUM. Korean ETF market is number 12 in terms of number of listings. It's number 6, and in terms of ADTV, the Korean market is number 3. The Korean equity market has excellent liquidity, and the ETF market itself has also excellent liquidity. It's a market with a daily active trading value of 3 trillion won. And compared to the market cap of the equity market, if you look at the AUM of the ETP, well, that the portion of the ETP AUM in the equity market has grown to about 3.3%. However, compared to other countries, the US has about 14%, UK about 19%, Germany about 19%, and Japan about 8.3%. So Korea has a relatively lower number in terms of ETF AUM in the overall stock market cap, which means that the Korean ETF has a great potential to grow. And now let's look at the product types. In terms of AUM and in terms of trading and value, well, domestic products are the dominant products. But in the past year, the AUM of international product has grown quite quickly. And also in terms of leverage product and inverse products, well, the plain vanilla accounts for a very, very large portion of the AUM. However, in terms of trading value, leveraged and the inverse product account for a large portion. And sector ETF, although it has increased in terms of AUM, but the market representative product still accounts for a larger portion of total AUM as well as total trading values. And let's look at investor types. If you look at 2002, that is the initial stage of the market, mostly in the LPs and retail investors accounted for large portion. However, with the market growth in recent years, the retail investors account for 46.5%, and the foreign investors portion has also grown, and LP accounts for about 15%. So we now have retail investors and foreign investors taking a very large chunk of the market in terms of the trading. If you look at the Kospi market of retail investors and foreign investors, of course, we do have institutional investors as well, but still, these foreign and retail investors take up large portion of the market. And let's compare last year to this year in terms of fund flow. And you would notice that in the sectors, there has been outflow of the fund, and I think that's because of the market of uncertainties. And then, however, if you look at CD or the short-term products, there have been quite a bit of inflow. And I think this represents the current fund flows. And if you look at the fixed income ETFs, there's been an increased inflow. And I think that reflects the the recent interest rate hikes. Let us now look at the ETN market. Let's look at the size first. The market opened back in 2014, so it's been about 8 years. The indicative value, the total value that is, has been steadily increasing. And as of September, the indicative value is about 9 trillion won, although it doesn't show. In August, the indicative value went over 10 trillion won. And the number of ETNs, the listings, is over 300. Compared to the ETF market, the volume may be smaller in the ETN market, but the ETN market itself is also posting very healthy, sound growth. And as for the ADTV, of course, there are ups and downs. However, compared to last year, the ADTV has been increasing about 100 billion won per day. And I think that is because of the price volatility in the commodity market. And so those changes are brought in mostly by the commodity ETNs. And also in October, we have 22 new listings of the ETNs as the Kosdaq 200 and Kosdaq 150 leveraged and inverse ETNs have been listed. And their daily trading value is about 400 to 500 billion Korean won. Let's look at the ETN types. And international products account for the large portion of IV as well as trading value, and you see that leverage products are very popular. And commodities, they were large in terms of percentage, they're still quite large. So the commodity ETN and their share in the market in terms of IV and trading value is over 58%, over 80% in terms of trading value. And so, however, with the launch of the more market representative products, I believe that trading in the commodity ETNs may decline a little bit. You see the difference between ETN and ETF in terms of investors. In the ETN, retail investors account for 44%, and in the ETF, retail investors account for 46%. And ETN, there is almost no participation by foreign investors in the ETN market. However, in the ETF market, there's a participation by foreigners by about 26%. So one thing that we need to do in the ETN market is to increase the participation by foreign investors. And in ETN, we have LPs, a large portion of the LPs. So the ETN market is mostly trading between the institutional, that is the LP investors, and retail investors. And So I have talked about how the market has been growing for the past 20 years. Now I'm going to talk about the key takeaways from 2022 ETP market. The market volume has been growing very quickly in the past 20 years, and the market participants, that is the issuers, have been increasing. In case of ETF, since the second half of 2021, 8 asset managers have been participating in the market new, and Merit and Kium are also have joined the market as new issuers of ETN. And these new players are issuing active products rather than passive products. And to have a differentiated returns, it seems that these new players are focusing on the active products. And in case of ETF, with the increased volume, their portion in the overall Korean public offering market has been increasing. Now it accounts for almost 30%. And one of the issues that's being discussed here in Korea is that that the ETF is going to be the major player in the public offering market. And you may say it's too early to say that, since the ETF only accounts for less than 30% of the total public offering market. However, that it seems to be the direction that the public offering market is taking. And this year, there was something that is attracting our attention, and that is that up until October, about 103 ETFs have been listed. Of course, there will be new other listings for the remainder of the year. And up until last year, we've had 90 ETF listings. And so we will have far more ETF listings this year as compared to last year. And if you look at the ETFs and the ETNs that have been listed this year, well, many or most of them are international products. So most of the ETP products that have been listed this year are international products. And the sector ETF has been also very popular. And in case of ETN, the commodity ETNs have been popular. And in ETF, our active ETF account for almost 50%. And so what's surprising is that about 2 years ago, when the equity of active ETFs have been listed for the first time. And so in less than 2 years, you see very active listing of active equity ETFs. And so if you look at the new ETFs and the ETNs in the market, they reflect market conditions such as the inflation and the Russia-Ukraine war. There is, as you know, increased market volatility due to these factors, and these volatilities are incorporated into the products. And so high dividend products or more stable products such as high dividend KOFR, CD rates, TIPS, REITs, and TDS if ETFs have been listed into the market. And also monthly dividend ETFs. Well, there are 13 ETFs and 2 ETNs of that characteristic have been listed quite a lot in the market this year. And we have amended listing rules and regulations. Now we have introduced target maturity fixed income ETFs. So 5 ETF issuers have asked for the listing of about new ETFs with this characteristics. As you know, ETFs, the investors can they would sell the ETFs in the market rather than redeeming it. So there is no maturity for the ETFs, and so that was one of the rules in our listing regulations. However, in order there is a demand for the expanded YTM. So the banks and the pension funds that have very conservative strategy of buy and hold, and so that is why we have decided to change the listing regulations to allow for the target maturity fixed income ETFs. And so we believe that thanks to these changes and amendments, there will be new products, ETF products that are going to be introduced into the market. And also we have a lot for the multi-asset ETFs or ETPs. Well, the ETFs, they have to have for the equity products as well as the fixed income products, they have to have at least 10 constituents. And so there was this list minimum number of constituents. And so, however, we have recently changed financial investment business-related rules, and so as long as there are 10 constituents that include equity as well as fixed income, it's okay. So here, for example, you could have one equity constituent and 9 fixed income constituent in one ETF. And I understand that there are about 6 issuers that are preparing for such products. And so with a fixed income, you would secure the certain returns, and then you could add equity constituents to ensure that you have alpha returns. And now I would like to talk about KRX's new initiatives. Well, the tick sizes that are used in the market in case of the equity market, the tick sizes are different per equity price. It could be 1, it could be 5 won, or it could be 10, or it could be 100 won. And so the tick sizes depend on the equity price. But in the ETP market, there's only one tick size, that's 5 won. And so for the low-priced ETP product, that 5 won tick size is relatively large. So that increases the transaction cost. And so anything that is below 2,000 won, that is ETP, then the tick size could be about 1 won. So anything that is 2,000 won above, the tick size would be about 5 won. And this is going to be implemented with the launch of our new trading system called Extra 3.0. And also, we're going to have more ratio of leverages. In the past, we only had plain vanilla and 2x. And now, for the fixed income, it's going to be between 0.5 to about 3 times. And for other ETNs, it's going to be between 0.5 to 2 times. And for the VIX ETN, so you could have like a 0.5 ratio. And for the fixed income, there will be about 12 different types. And for other ETNs, there will be 8 different leverage ratio ETNs. And also, in order to better protect investors, we are providing education. We are also publishing booklets, and this sort of investor protection activities will continue on. And so with this, I would like to conclude my presentation. Thank you very much for your attention. Yes, Mr. Song, thank you very much for your presentation. He has talked to us about the Korean ETP market. That was quite interesting. And I would also like to hope for the continued growth of the Korean ETP market. We're now going to move on to the second presentation.
S&P
Now I'm glad to introduce to you the next speaker. Next speaker is Mr. Tim Brennan, Head of Capital Markets and Exchange Strategy of S&P Dow Jones Indices. The title of his talk is Global ETP Market Update.
Good morning. I would be remiss if I didn't start by extending our condolences from S&P DJI to the people of Korea and to the parents of these young children. I can't imagine as a parent the anguish and the pain that they felt upon waking on Sunday morning. So with that, I'd like to get started here and say we're very pleased to be invited, honored to be presenting here this morning. I'm going to be talking about the flows and in both assets under management and in the number of ETPs that have been created over the course of 2022. The data in these slides for 2022 is up to and including September. So please pay attention to the slope of the lines. We're not quite finished. As you can see, it's been a great story. For the last 10 years, we've seen extraordinary growth. 2021 obviously was a year unlike any other year. We had volatility, we had uncertainty, and we had a market that went straight up. And the beneficiaries of that was the ETF industry. We saw assets under management and ETPs grow at rates that we had yet to see ever in the history of this product. This year has been a little bit of a different story. With the introduction of inflation into the market, we have seen markets retrace in a significant way, and that has had a direct impact on the assets under management in our current state. That being said, given how much we have had these inflationary forces stick into the market, overall it's been a fairly robust year. You can see that in 2022, just year to date, the ETF count is up in a significant manner. We're up almost 10% in the number of ETFs. We're also doing quite well when you look at assets under management to date. Here's how things look around the globe. Obviously, US is an outsized portion of the AUM as far as regional is considered, followed by EMEA, and then APAC and Canada. Again, equities are the story. Equities have been the story. They definitely lead the league tables as far as ETF and ETP assets by class, followed closely by fixed income. We're optimistic at S&P DJI that we'll see more growth in the fixed income space, and that is critical to our future. We're very excited about our opportunities for growth in the fixed income space. Asset by structure, again, this is a massive outsized number. 99% is in the ETF category. Obviously, room and opportunity for other areas to grow in this. US, representing 74%. We'd like to see more growth around the world. We are starting to see a little bit, much greener shoots around the world when it comes to growth. Equities, as I said before, really taking control of this. The delta between equities and fixed income is massive, but as more and more attention is put on fixed income, we do believe that there is great opportunity for the fixed income space to grow. As we saw over the last couple of years, oftentimes there's greater transparency and greater price discovery in the fixed income ETFs than there is in the actual physical market. And again, this last box on the lower right is really the outsized box. We have room to grow in other classes, but ETFs stand alone. Here you see the growth by asset class, and again, keep in mind that 2022 is truncated. It's 3/4 of a year. Again, that being said, where are we at there? There we go. The ETF count certainly looks like it's growing at a rate that 2020 to 2021 grew, so pretty excited about that. Hope to see further growth for the rest of the year, but right now, I think, given market conditions, this is fairly healthy. Assets under management, the attrition here is mostly due to inflation and the markets in general trending down this year, equity markets trending down. Overall, it's not that horrible, and we're optimistic for the years to come. Fixed income is an area, again, as I mentioned, this is just through September 22. And if you look at the growth in fixed income, it's an extraordinary story this year. So excited to see where we end up at the end of the year on this one. These charts here take a look at the cumulative flows, over the course of the year. And again, as I said, this year is a bit extraordinary. These slopes are, they don't tell a great story about 2022 so far, but it's not a horrible story. It was time for this to reset. So we're optimistic, again, that this will continue to be a fairly, decent year. And we're very much excited and looking forward to next year and the years beyond. This is something that I think is somewhat unique. Where is my green dot here? It's all over there. Anyways, the majority of the issues are in the top 3. The delta from number 3 to number 4 is pretty massive. The delta from number 2 to number 3 is pretty massive. So we do see continued concentration at the top of the stack. Hopeful that these other folks start to grow even more, that competition pushes each other, and that we continue to have a very healthy and robust ETF issuance ecosystem. The top 2 are just head and shoulders ahead of the rest. We're really optimistic that the others will start to show stronger. As far as the index providers, this kind of tells the same story as the ETF issuers. You have concentration at the top, and then the rest of the folks kind of fall into place. We do, at S&P DJI, look forward to being pushed by the newer entrants into this. It keeps us innovative and keeps us nimble and makes us work a little bit harder, which we greatly appreciate. And if we can continue to grow the pie and we get our percentage of the pie, it's not a bad deal for everyone. Kind of flying through here a little bit, sorry. So Korean market growth. This has been an extraordinary story. The slope here of this line is really something else. The Korean market growth has been one of the best stories around the globe. I believe the gentleman before me talked about the last 10 years and what it's looked like in Korea, and that's pretty obvious here. It's come from here to a number that's absolutely extraordinary. And it really doesn't show any signs of slowing down. Looking at the tables here, I mean, these are all really positive signs. We're 10% off of the year end on 2021, and we're only 3/4 of the way through this year. So this is, given all things considered for 2022, this is really a great spot to be at. And if everything continues at pace, there's a great chance that we end up the year flat year over year. Equities obviously having, a little bit of a weight on them due to current conditions, but very optimistic. This is logical to see the growth in fixed income. Given that we've moved into a positive rate environment, this is not to be, no big surprise here. So we're, continuing down that path. Where am I at here? Korean flows, starting with the first chart at the top. This, again, the slope of this line is really something else. It's amazing to see how much this grows year over year and continues to grow over the past 5 years. Looking at equity flows, obviously we're ahead of previous year, but it'll be interesting to see if we do indeed come in at the end at that point. Nothing to say that we won't, but there's definitely some headwinds ahead of us here. ETF, fixed income ETF flows. This is, again, these sharp spikes are really something else. And you just see a lot of inflows coming into the market here. So that's fairly extraordinary. And we're not sure that we're going to see that continued rocket ship there. Over here, obviously, the ETF and ETP flows in the other category. Trailing, not exactly sure what we're going to see at the end of the year on this, but there is a chance that we can cross this line and get up to where 2020 was, but we're well ahead of 2021. This looks much like the chart when we were looking at the other issuance chart, where it's very heavily weighted. At the top, you have the two, most significant players here in the Korean market who dominate the market, and the delta between number 2 and number 3 is quite significant. Seems to hold steady year over year, so definitely concentration at the top. But we are starting to see, some decent growth here along the way. There we go. Very happy here with our 8%. We have this listed as other, but the majority up here is KRX in here. I'm unsure why we listed that as other. But once again, there is dominance at the top of this stack, and like to see some of this persist into some of the other issuers, and all of us challenge each other to grow the pie even greater. So where are we going to go? This rocket on the left is unbelievable. You look at the delta and how it's changing from the first 19 years to where, it took us 19 years to grow the first trillion, 3.5 for the second, 2.5 for the third, 1.5 for the fourth, 1 year after that for the fifth. How quickly do we get to the sixth? If this holds true, we should be about 9 months from that, and we'll hit the 6 trillion in that. This growth shows that we're in a very, very healthy, positive type of industry, and we're very excited to be a significant part of this here. What's next year? Well, definitely see opportunities in this fourth industrial revolution. We see this coming through in a lot of the thematics. Very excited in this space around the Internet of Things, robotics, automation, what's going on here in democratized infrastructure, AI, the application of AI to index creation. We're very active in Kensho and taking artificial intelligence and coming up with very, very smart thematic indices. Obviously, ESG, climate, carbon are areas of growth. We've yet to really scratch the surface there. We're starting to in the equity side, but there is still a ton of growth on on the fixed income side of things. And what does the chain do for us? What does democratized infrastructure? What happens when we start to tokenize different issuances and come up with really creative ways to increase access to tokenized investable instruments? In the presentation before me, there was some talk around ETNs and bringing in more foreign dollars into KOSPI, I believe was the bottom part of that page. And this may be a partial answer to that, is through tokenization, through smart contracts, through distributed ledger technology, creating easier access for people around the globe. Maybe it does start to open up greater opportunities for foreign flows or cross-border flows, even more important. So we're at a very, very exciting time in this world, and I think the next 10 years are going to be pretty telling. And if things continue the way we are, we're going to have 10 more of these conferences, and we're going to have a lot of really good things to speak about. So with that, I'd like to conclude.
Thank you. Thank you very much. If possible, can we have just one question from the floor? Mr. Brennan? Yes. Thank you. 자, 발표를 들으셨습니다.
So I think we can take one question from the participants. So if you have a question, please raise your hand and we will deliver the microphone to you. Simultaneous translation is being provided, so you can ask your questions either in English or in Korean. So if you have a question, please raise your hand. No questions? If that's the case, so that was the end of the presentation made by Mr. Tim Brennan.
네, 감사합니다.
Yes. So we have just listened to presentations in session number 1. And this is a very meaningful year as we are celebrating 20 years of ETP market here in Korea. And we have far more interesting presentations prepared for the rest of the conference. We're now going to hold the first panel discussion. We're going to be discussing about the market status of the global ETP market, ETPs, and we're going to be inviting panelists from different markets. And we will be having some panelists joining us via Zoom. We're going to be discussing about investment strategies as well as how the market is going to go in the future. So we're going to be discussing the directions. And as I said before, we have a booth set up in the next room. Asset managers at brokerage houses, insurance firms, and they have their booth set up in the next room. And so please do visit the booth in the next room so that you will get very good information from them. Now, I believe that we are ready for the panel discussion. We're going to be discussing global ETP market status and development and plans. I would like to ask our moderator and panelists to the stage. And Mr. Kim Bum-seok, who represents the Korean office for the S&P Dow Jones Indices, is going to be serving as the moderator. So we have Mr. Hwang Woo-kyung, KRX, of Mr. Lee In-kyu for Hong Kong Exchange, and Mr. Daisuke Tanaka of the Tokyo Exchange, and we also have Lida S. Rami from London Exchange. These panelists are joining us via Zoom, and so we also have, I'm going to ask Mr. Kim Bum-seok to moderate that session. My name is Kim Bum-seok. I head the Korean office for the S&P Dow Jones Indices. It's a pleasure to meet you here today. We have We are going to be discussing global ETP market status and development plans. And we're going to be hearing from our panel discussants from different markets. And we have 3 panelists joining us offline and 2 joining us online. So I'd like to ask you to introduce yourselves. Good morning. My name is Hwang Woo-kyung of Korea Exchange. And if I may just introduce my work. We am in the marketable securities division, and my division is responsible for all the ETP products such as ELW, ETN, and ETFs. For the new products development and product listing review and market operation, as well as institutional changes, my division is responsible for such work. Pleased to meet you.
반갑습니다. 예.
Hello, my name is Lee In-gyu, Vice President of Exchange Traded Products of Hong Kong Exchange. We work with Asian global institutional investors, and I'm in charge of sales and marketing of ETP products listed on the Hong Kong Exchange.
Morning. My name is Rob Morocco. I'm responsible for the ETP listings business at Seoul Global Markets. In my role, my team and I look after 3 main pillars of our ETP listing platform. One, issuer relationships with issuers and asset managers from around the globe. Second, our product structure and market structure for which our listings platform supports ETPs globally. And third, our liquidity management programs and liquidity provider programs to help support our listed products to ensure phenomenal market quality.
예, 반갑습니다. Lida, can you introduce yourself?
Please turn on your mic. You're on mute.
네, 마이크 좀 올려주시겠습니까? 소리가 지금.
Can you please turn on your mic? We don't have your voice.
혹시 네, Mr. Tanaka?
Yep.
Can you introduce?
So my name is Daisuke Tanaka. I'm a director of ETF market development of Tokyo Stock Exchange. And this department was established just this April to promote ETF market more efficiently. So I'm glad to have this opportunity. Thank you.
Thank you. Lida, we didn't hear from you, so can you introduce yourself again? Sorry.
Would you please turn on your microphone?
Lida, so we cannot hear you. Can you on your speak? Volumes up, please. Sorry, we cannot hear. 예. 네. 그러면 그 일단 순서.
So you just introduce yourself, and in 2022 maybe you can share with us the ETP market status on your exchange, and maybe you can introduce some of the regulatory update. So Miss Hwang.
주제 발표에서
Mr. Song Young-un has made a presentation about the Korean ETP market. So what I have to say may overlap what he has said. If you look at the ETP market trend here in Korea, well, up until last year, well, the stock market was quite good here in Korea. And so the equity ETP was the one that was attracting the most attention. And the market returns, well, the thematic products or the sector ETFs with above average market returns were quite popular, and also active ETFs that is seeking alpha was also attracting a lot of investments as well. And this year, as you know, the global stock markets are in downturn, and so the equity ETF has less attention as compared to last year. But now we have high interest rates, so cash assets or products with a stable of income streams, such as the fixed income ETF, as well as the allocated ETFs, are receiving quite a bit of attention. And also, we do have many retail investors, so we have diversified investor base, and so asset managers are trying to develop differentiated products, and they are coming up with very unique products. And so at KRS, we are reviewing these products carefully, and also the KRX is trying to reduce the obstacles to listing of such creative and unique products that are being developed by these shores. And for the ETN products and the ETF products, we only had 2x and plain vanilla products, but now 0.05x as well as 3x leveraged products are allowed. Of course, the 3x products are as of now only limited to the fixed income products, but in the future, this high ratio leveraged products will be available for all other products. And the Korean investors are very actively investing in the European market and the American markets, and they are mostly investing in the 3x products. And so to make sure to have these funds to come back to Korea, we're trying to reduce regulatory obstacles that exist in the market. And also about the target maturity of fixed income products, well, it's going to be listed next month. And so we have changed listing related regulations so that such a product can be available in the market. And so we will continue to change or improve regulations.
감사합니다.
Thank you. And Mr. Lee In-gyu, I'd like to share my slides.
예, 먼저 저 홍콩 거래소 ETP 시장
I would like to give you an update on the ETP market of the Hong Kong exchange. So the 5 numbers represent what's happening on the Hong Kong ETP market. And the total market capitalization is 425 billion Hong Kong dollars. There are 166 products listed. This is as of the end of August. That is about 73 trillion Korean won. Last year, it was 627 billion Hong Kong dollars investment inflow. And as you see here, you see the number 166. This is the number of ETP products listed on Hong Kong exchange. ETF is to 127, and average and inverse products is 29. In 2016 and 2017, there were many changes in the market. Also in Hong Kong, about 5 years ago, or for the past 5 years, smart beta, tech, metaverse, blockchain themed or sector thematic ETFs are popular. Active ETF and ESG ETF. For example, we have carbon credit ETFs newly listed.
말씀드리면 이제 일평균 거래되는데 앞에 이제 114억 달러인데요. 요거는 원화 상승률 한 2조 원 정도 하고 있습니다.
The average daily trading volume is 11.4 billion Hong Kong dollars. Compared to last year, that's a 50% increase. For the past 11 years, the market grew by 17% on average. I will share with you some of the regulatory updates. There was a recent regulatory amendment that led to further growth of the ETP market in Hong Kong. There are 22 issuers in Hong Kong and 39 market makers. In Hong Kong, of course, we have US issuers, European issuers, and Asian and Korean issuers, serving the market as liquidity providers for the exchange. So that was a brief update on the Hong Kong market.
Thank you. Thanks. I believe I have some slides as well. If I could just ask some slides, please.
도와주시겠어요?
I think somebody needs to help with uploading of the slides.
So maybe we'll proceed with
예, 혹시 그
GPX.
슬라이드 지금 그 CBOE 슬라이드 좀 보여주시겠습니까?
I understand that there's a slide presentation prepared.
Yeah. In the meantime, without the, can you talk about your market?
Oh, sure.
Yeah, current market status and also, recent change of your regulatory environment.
Absolutely. Well, again, appreciate the opportunity to be amongst the fellow panelists. In order to give our global update, I think it's helpful just to give a little bit of background with CBOE in relation to the ETF market in the US and from around the world. Most folks know CBOE really as an options-based exchange founded in 1973. 50 years later, really at our core, we're an exchange, global exchange operator. One of our largest businesses globally is our equities transactional business. In the US, we are on par with our peers, New York Stock Exchange and NASDAQ. In Europe, we are the largest pan-European exchange for trading equities. Our footprint has grown quite drastically over the past few years. Specifically for ETPs, we are the second largest ETP listing venue in the US. We account for just shy of 19% of all US listed ETPs are listed primarily on CBOE. We now have a ETP listing footprint that covers 5 different markets around the world. Canada, most recently, with our acquisition of the NEO Stock Exchange in Toronto. We acquired Chi-X, the former Chi-X Asia business in July of 21, which now gives us a listing venue in Australia. And to round that out, we have listing venues in the UK and in the Netherlands. In aggregate, we have about 800 plus ETPs listed across these markets from approximately 80 different issuers. When we think about some of the innovations we've seen really from a global perspective, one that is absolutely still, I believe, in its infancy is actively managed ETPs. When we look at an aggregate actively managed ETPs with a total of approximately $440 billion globally, still a lot of room for growth. We've seen innovations really from around the world for this product type. Looking at the US several years ago, in 2020, CBOE was a part of the first launch of a semi-transparent, actively managed ETF that was brought to the market by American Century. The reason I highlight this is because the product wrapper continues to innovate, especially for active managers. And when we look at that product now coming up on next year will be its 3rd anniversary and 3 years of performance, I do believe that's where now we can begin, you'll see an uptick in that sales and marketing that goes along with that product. So again, the reason I highlight it is because this is not just a phenomena in the US, but we look around the world. We look at Australia in that market structure in particular, where you can have a listed and an unlisted version of the ETF. In Europe, we've had this for some time with a listed and unlisted share class. So again, when we look at the evolution for traditional mutual fund managers, now being able to use different wrappers, different technology, different IP out there to bring their products to market, I believe you'll see only an uptick in continuation in actively managed products coming to market and their growth.
Thank you. Mr. Tanaka, at Japan Exchange. Hello. 연결이 아직 안
It seems that he is not connected.
향후에
Why don't we now talk about the future development of the ETP market? And I think Mr. Tanaka is back. Or we'll have to wait. We'll turn to Ms. Wang. And please talk about what kind of products will be popular, or what are some of the market outlooks that you have?
And as our second presenter has said, the Korean market is showing the highest growth rate in the global ETP market. And for us to continue to maintain this high growth rate, we will have to take some actions. Well, we do have many retail investors in the ETP market. However, the products are not diversified enough. We have equity-based product, but they are, they take up the chunk of all the product listed. And so with the equity market suffering around the world, the ETP market is also suffering here in Korea. So we do need to diversify the products so we can satisfy different needs of different investors. And so we are going to have very diversified ratio of leveraged product. So we have made those regulations. And also for the mixed asset products, we are going to give more discretion to the asset managers so that they can pick and choose different portions of constituents into the ETF and products. And our goal going forward is to satisfy different investment demand, and to also have listing of diverse ETF products. And so the KRX is going to, of course, work to have regulatory reforms.
Mr. Lee, I'd like to talk about the market structure change that happened in the Hong Kong exchange recently. Would it be possible to have my slides back? Yes. Please show my slides. So, since 2019, 6 updates happened, and we have designated specialists now in Hong Kong. So it could be understood as remote market maker, and this was introduced in 2019. Global liquidity providers can enter the Hong Kong market without any license, and they could benefit from the new regulation, and they don't have to have the license, but they will be treated equally to the market makers. And global market makers in other countries and continents can participate in the Hong Kong market to be involved with the transactions. And the second one is buy-in exemption. And this gives market makers an extra day for covering liquidity provisioning positions. Since so far, market makers, if they transact for the purpose of market making, you have extra 1 day. And now market makers can better provide liquidity. So the settlement day is now extended by 1 day. And the next one was launched in June 1st, 2020. We have CQ and new spread table. And the liquidity providers provide the selling price for the 80% of the trading day, and now we have gradings. And within the ETP grouping, they have to provide the sell price between 40 to 100 basis points. And we had the spread table that is same as the equity. Now we have a separate ETF spread table that's launched. Another thing that I'd like to share with you is number 4, which is the stamp duty exemption. Now, the market makers do not pay stamp duty, and this was introduced in August 1st, 2020. And now this new regulation waives stamp duty of 30 BPS on stock transaction of market makers in relation to their creation and redemption activities. And this leads to the lower cost for the creation and redemption and support liquidity in ETPs, and the spread has been reduced by a significant margin. And Rob?
What is your next year's plan regarding the new?
Well, definitely, as I mentioned earlier in my remarks, and my U.S. industry colleague Zhang Bui will be giving an update on the U.S. Market as a whole. But on my earlier remarks, absolutely 2023 will be the year of supporting actively managed products for CBOE. In addition, we look at some of the other proposals we have in front of regulators around the world. Definitely topic du jour in many cases, but cryptocurrency, especially in the U.S., of eventually a cryptocurrency product being listed, a spot product being listed in the U.S. We currently have multiple filings in front of the regulator to date. We have the ability to list those products today in Canada, in Europe, in Australia. The U.S. is still the area which we know there will be much work to do with the regulator in terms of development. And then really the third area that we've seen tremendous growth globally and demand have been for exchange-traded products that utilize optionality embedded within the products. These are also known as defined outcome, target outcome, buffered outcome products, if you will, essentially all the same thing. And we now see the U.S. has been a fantastic growth story of those products, products coming from innovator ETFs and from First Trust, most notably, each with about the same AUM, but approximately $9 billion billion in each of those products within 36 months. I think a testament to still a lot of area for growth there. Recently, we launched a few products with iShares, buy writing strategies on their most flagship fixed income products. So again, when we think about 2023, when we think about top opportunities and priorities, those would be the ones I'd highlight.
Thank you. 지금
I think Tanaka is back from Tokyo Stock Exchange.
regulatory environment. Thank you.
Okay. So can you hear me? Okay. So let me show some slides. Can you see my slide? Okay. Okay. So this is the number of newly listed ETFs. In recent 5 years, the number has been really increasing, especially foreign equities and fixed incomes are a recent trend. This is AUM. As a whole, the AUM of Japanese ETF market is about 60 trillion yen. However, about 80% of them is held by the Bank of Japan as a monetary policy. So excluding the Bank of Japan, the remaining part is about 12 trillion yen. The left graph shows that remaining part, and as you see, the size has been steadily increasing and it has almost doubled in 5 years. Especially, as you see on the right graphs, foreign equities and bonds have rapidly increased in 3 years. This shows trading volume. The left graph is total trading volume of all categories. And as you see, the majority of trades are coming from leveraged and inverse type of ETFs. However, as shown on the right graphs, trading volume of foreign equities and bonds have shown strong growth. So, as I explained, Japanese ETF market has grown very rapidly, and I think one of the reasons for this is that our initiatives to improve our market liquidity. Mainly, we did 2 things. First one is to introduce a market making scheme in 2018. And since then, we have gradually enhanced the scheme, and it helps improving liquidity on auction market. And other initiative is to provide RFQ platform called Connector. We promote this platform to institutional investors so that they can directly access to good prices from market makers. In fact, the number of Connector users has reached to more than 100, and trading volume via Connector has been steadily increasing. I think these initiatives help Japanese ETF investors to trade lower cost and increase incentives to use ETFs. So this is my brief introduction of the Japanese ETF market. Thank you.
Thank you. 예, 오늘 그 접속 문제가 좀 있기는 해.
We had some connection issues, and I think we'll have to wrap up this discussion session. And the panelists will be on site throughout the conference. So if you have any questions, maybe you can directly engage with the panelists and the speakers. I'd like to thank you all for your kind participation. Hope to see you next year as well. Thank you very much. So thank you, Mr. Kim, for kindly moderating the session. Unfortunately, Lida Eslami from London Stock Exchange could not participate in the discussions because of the connection issues. I look forward to seeing her next time. Now we will take a 10-minute break and continue with the next presentation session. Thank you.
is ETF investment in the time of transition. We are going to be looking at the latest ETP investment trend against the backdrop of increasing uncertainties due to inflation and others. We're going to now invite Mr. Ali Zaidi of FTSE Russell to talk to us about ETP investing in the new inflationary economy. So let's invite our speaker to the stage.
안녕하십니까.
I am responsible for the index. My name is Lee Boyo, and we provide investment benchmarks, and we also provide data as well as research and analytics to our investors. And are going to talk about the index trends in 2022. There are 4 changes. One is sustainable investment, and second is thematic investment. Third is resilience, and this is the risk management efforts on the part of the investors. And then the fourth is the data analytics, and this is the investment based on transparent data. And today we're going to be focusing on resilience. We are going to be talking about real asset-based investment. And we are going to be talk about EPRA Nareit Index, which is our flagship index. And I'm going to be talking about a REIT investment and investment diversification. And then I'm going to talk about the fundamentals of the REIT investment, and I'm going to talk about the value factors in the factor investment. Now, I'm going to introduce you to Ali Zaidi, the head of real asset research at FTSE Russell Real Assets. Thank you.
Good morning. My name is Ali Zaidi. It's a pleasure to be here among many distinguished speakers. It's my first time in Seoul. It comes at a time at a very tragic incident that unfolded yesterday. So for my team, we would like to extend our condolences and strength to the families and friends of affected. This is my first time in Seoul, but it's not the first time that I've connected with South Korea. As growing up in the Netherlands, we were aggressively supporting in 2002 the World Cup because of the Dutch coach. And as he was given an honorary citizenship for the country, I always dreamt that it would be an opportunity for me too someday. We'll see. So I'll start off my slide with why listed real estate. I hope you see my presentation as a contribution towards raising awareness and also about attributions of the asset class. I mark this as why listed real estate instead of REITs. REITs are a tax vehicle that are governed and offered at a country level, so there is no global REIT legislation. However, most REITs are identical in their structure. I'll talk about 3 attributes that are consistent across asset classes in terms of real estate, different forms of real estate, whereas the bottom 3 would be a focus on listed in particular. Diversification, this is an attribute anchored in the underlying assets. So where long-term commercial real estate performs differently than other equity classes, including banks, technology, and so on. Total return, as we have coming off a period of strong economic performance of real assets, any type of form of real investment has been a strong performer in terms of location, in terms of correlated to economic growth, and also several other trends, including urbanization. Inflation management is a very specific attribute of real estate. As asset owners, you benefit from leasing out commercial real estate, at the same time also capital appreciation. So these two inherent qualities make it a strong component of any diversified portfolio. Now the bottom three are more in line with specifically listed real estate. Liquidity, because REITs are listed or listed real estate, in general, the liquidity is unmatched compared to other forms of real estate investment. Transparency, which is a core feature of being a listed company, over the years it has become a very important feature by incorporating sustainability metrics and other requirements on a country level. Finally, high dividend yield. I'll come back to that later in the presentation as well, but because REITs are mandated and structured to pass through income in terms of dividends, 95% of retained earnings are distributed among shareholders, so all else being equal, they command a higher dividend yield. Now, FTSE Russell FTSE real estate indexes are comprehensive. They offer solutions in different types of thematics, different types of exposures, and different types of methodology that the growing need of the asset class requires, and we are very happy to partner with any asset owner or asset manager looking at solutions and incorporating as a dedicated or as a multi-asset strategy. The index structure is based on a set of transparent rules that take into account LSEG's total visibility on commercial markets, the allocations of the allocation of market, and also taking into attributes of each specific market into assigning a different trading level, in making the offering modular, investable, and at the same time, through its ground rules, very transparent to follow. All of that leads to a significant AUM being benchmarked to the FTSE EPRA Index in particular. The 407 billion relates to dedicated allocation. It does not include multi-asset strategy that use the same index. In terms of index construction, it's a taxonomy that we are very proud of. It starts off with over 19,000 stocks, 75 trillion, and that's drilled down using systematic screening on tradability, in the end resulting in over 500 set of constituents that allow you to track the global real estate market. As with any benchmark, a benchmark could be designed in infinite ways. This benchmark was always designed, and to the center of it is the proxy of returning the same returns as owning real estate directly. When you speak of real estate investment through indexing, it's very important to note that a strong feature of every index is its methodology. Quite often, indexes are referred to as a single tool. However, it pays to look at the different levels of indexing. The red line here refers to the price index, which is simply the aggregated performance of all the stocks that are included in an index, corrected for market cap. Whereas the yellow line is the same index with the inclusion of dividends. Now that's a strong feature of investing through listed real estate, where as an asset owner, your income is, which is channeled through dividends, is deployed at the same rate of return as the underlying index. Now that's similar to owning a commercial asset and monthly income being deployed into the asset, something very difficult, if not impossible, to do on private real estate. Now that feature allows to distinguish between the two sets of returns. These are two versions of the same total return index, where one reinvests the dividends while the other one does not reinvest. So that mimics more how a real asset ownership resembles, where the income is accumulated until it can be deployed in the next set of opportunities. The same slide over time is a significant contributor in terms of accumulated return. The gray area is simply demonstrating the impact of the reinvestments of income. As a passive asset manager, if a company is offering cash dividend over scrip dividend, this index assumes that that dividend is taken as scrip. Whereas for instances where a company is only paying out cash dividend, the asset manager, in order to keep its tracking error low, is expected to put that money back into the index. Now that's a particularly helpful feature because, and I'll come to that later, the income stream is a lot more stable than the stock price. Now what does that mean is during the times of high pressure when the index is down and securities are trading at a discount, your dollar value buys you more unit in the underlying, something that is very hard to replicate by using the non-listed or direct. Over time, the sector has grown in size but also in terms of diversity. Because the REIT model had been very suitable in attracting capital from dedicated users, the type of sectors that are offered currently from the indices are something that create a balance between core exposure, which is retail, office, residential, industrial, but at the same time, a growing weight of non-core exposure. With that, perhaps the next slide demonstrates a bit better. This is how the index has changed in terms of its components over the years. Data centers, life science office, student housing, self-storage are asset classes within commercial real estate because of their complexity and because of the capital requirement are accessible to the well-capitalized investors. The listed real estate space allows this to be incorporated in strategies for all investors of all sizes. Now coming back to the stability of income. REITs are owners of commercial real estate, and just like any owner of real estate, the leases tend to be longer term, whereas the stock price being listed on the short term is volatile in line with the general equities market. Now the first graph demonstrates the yield over bonds, and it should come as no surprise that this is over time a higher yield. But more interestingly, towards the bottom, you can see that when we separate these two out on different side of the axis, the dividend yield of the FTSE EPRA Nareit Index after the financial crisis, and I'll come back to it while we're looking at after the financial crisis, is a lot more stable even against the 10-year Treasury of the US, which is the reference benchmark for stable risk-free returns. Now, when we look at the REIT market over time, that spike around the global financial crisis created a paradigm shift. At that time, high level of leverage by REITs was something that was applauded, as REITs were able to borrow at rates below the cap rate, and the cap rates were significantly high. So investors were very pro-cyclical in the sense that they preferred to have leverage instead of diluting the equity. That changed dramatically. So what the period that followed, you can see by the red trend line, arguably a period where the interest rates were lowest in history. Rationale would dictate that this was probably the period where leverage should go up because you can borrow, in many cases, under 1% and lock it for years to come. However, the shift that came from the lessons after the financial crisis, where listed real estate had declined significantly, was absolutely no tolerance for leverage above a certain level. So even though interest rates were markedly lower, it was a period where REITs had deleveraged. What does that mean now? That means that compared to the financial crisis that we had in 2008 and 9, the balance sheet is much stronger and the capital pool is much more diversified. This compares favorably against other asset classes where the leverage did not go down as much. In fact, in some cases actually went up. A comment around our ability to take our real estate offering and offer innovative solutions is the application of factors. London Stock Exchange Group combined with FTSE and the data that we have by acquiring Refinitiv gives us a deep wealth of data that we can employ. Using IBIS factors data, we take the same index and we apply pure factors. Now, factors are attributes that have been known to academically and also from practice have been very helpful in explaining performance for different asset classes. When we test the REIT market, the value factor towards struggling with the color, but the light green is the factor that had the lowest potency in terms of explaining the returns. This should come as no surprise. REITs are very different to other listed companies. Because of the mandated dividend requirement of having to pay out 95% of their retained earnings every year, that means the companies do not hold a lot of cash on their balance sheet. And as they're going through their expansionary phases, they need to go to the market and raise capital. And that's a regular activity for all REITs. Now, if a company is trading at a discount for some reason, then issuing capital is an exercise that requires further discount. So that affects the cost of capital. So companies trading at a premium, REITs trading at a premium are also able to raise capital at more favorable rates. That overall has demonstrated that there's no mean reversion within the REIT sector, which does happen in other asset classes when there's dislocation between fundamentals and value. The second factor that had very good or very high explanation power was momentum. That talks to the efficiency within the REIT market and also slightly related to why value does not work. When a company starts trending above its peers and is trending at a premium, that trend is known to continue for some period. There is not an obvious cutoff at a month end or a quarter end. And that means that the market is anticipating better results than its peers. And having seen that the results tend to be in line with expectations, the premium is then closed at times when the reports come out. This means that there's market efficiency in the REIT market, and that one of the reasons for that is this space is still heavily invested by dedicated users. REITs compared to other asset classes are fairly straightforward to value. You have the cash stream that you can discount, and you have the second component, the asset value, where you have many metrics where you can use the forecasted values that allow you to get to a future value. Basically, very little unknowns compared to other sectors, especially when we're talking about the growth companies. So overall, this ability to look into factors allows us to provide the benchmarks that are not only diversified in terms of sectors, but also geography, but we can create another layer that these are diversified or tilted towards certain factors that have the potential of providing long-term improved performance over market cap rating. So towards the end, I would welcome any questions. Please do use us as a resource. I still carry the trauma of having a very harsh finance professor, and he told me every time you do a presentation, be respectful for the people that are paying attention to you. So give them something something that they can use. So all these attributes and strong features of REITs are somewhat in question given the market performance. A lot of the REIT attributes in terms of transparency, inflation management, are something that have worked historically. The level of inflation that we're seeing right now is something that happened 40 years ago when REITs did not exist. So for someone to draw a conclusion on using the REIT index in a period when these did not exist is something that carries less weight. Secondly, when I was thinking of how to close, I could not think of a better comment that came from my colleague in the research team. He said, all bear markets are different. They're very unique, different driving factors. However, there's one common feature in all bear markets, that they all end. So I think we can safely say that we will come out of this, and looking at REITs would be a value, time well spent and a value add activity. Thank you.
Thank you very much for your presentation. 네, 질의응답 시간 갖도록 하겠습니다.
So now we're going to have a Q&A session. So if you have a question, please raise your hand and we'll bring a microphone to you.
질문이
If not, there is no question from the floor. So with that, we would like to conclude this presentation.
네, 세션 2 함께
So we are at session number 2, and we are going to listen to the second presentation. And I'd like to now introduce to you the second speaker, who is Mr. Chris Hackel, Global Head of Sustainable Indices from Bloomberg. So ESG is getting all the more important in ETP investment, and the title of his talk is Making an Impact in the Green Economy with Cross-Asset Indices. Please join me in welcoming Mr. Chris Hackel with a big hand.
Morning, everyone. My name is Chris Hackel, and I'm the head of Sustainable Indices at Bloomberg. There we go. Okay. In recent years, we've seen the rapid growth of sustainable investing from this small sort of niche theme into increasingly a significant part of the global investment landscape. Now, that growth has created an entire new category of opportunities for fund and product creators. And in coming years, it wouldn't surprise me at all to see the asset growth and the number of new product launches dwarfing what we see here on this chart. Of course, we can also expect that there's going to be some challenges that need to be overcome before global institutional and retail investors fully embrace sustainable investing. And here in Asia, you're probably looking at this chart and you're wondering if this might just be a regional theme. I mean, after all, the vast majority of the growth here is coming from Europe and it's coming from the US. Maybe you're also wondering whether sustainable investing is really ever going to get traction with retail investors. After all, a lot of these assets are coming from institutional investors. So these are some of the challenges and some of the questions that I'd like to address today. So I'm going to start with this. In many ways, in my opinion, sustainable investing really isn't that different from traditional investing. Now, granted, you do have a fair number of investors who are looking to incorporate their values, or who are looking to incorporate environmental impact or social impact within their allocations along with returns. But sustainable investing also includes products and funds that are positioning themselves to benefit from some significant changes that are starting to happen in the world. For one, a change like the transition to the low-carbon economy, or a change like new risks that are facing companies, risks that have to do with climate change, with resource scarcity, things along those lines. And then maybe most significantly, change that's coming from new regulation that's being introduced. And that regulation is starting to influence the way that companies behave, and even in some cases is influencing policy decisions made in countries. So these are real financially material considerations, and they can be addressed in a new generation of sustainable financial products. So I'm going to give you an example now. Consider the hundreds of billions of dollars that are now flowing to companies that are focused on renewable energy, clean energy, energy infrastructure, and other aspects of the energy transition. Now, interestingly, although you saw on the previous slide that assets in Asia in sustainable ETFs have remained relatively low, this region is leading the world in terms of energy transition, investment, and growth. Now, that to me is a clear sign that even for investors who aren't interested in these environmental objectives, there is an opportunity in this shift that's happening from fossil fuels to renewable and clean energy. Good. So now that we've framed some of the opportunities, what are some of the challenges that are faced by fund and product providers? Well, I mentioned before, the asset growth in this theme has primarily been institutional. Now, institutional investors have the resources to really dive deep and sort of understand the nuances of these, in some cases, fairly complex approaches, like when you have ESG score integration. Mainstream investors, on the other hand, for them, there's really a lack of clarity here about the objectives being pursued, and particularly about the performance implications of sustainable themes. I take as an example, again, ESG scores. Now, ESG scores that are coming from leading ESG ratings providers, MSCI, Sustainalytics, Bloomberg, those are not meant to, and this is according to the providers of the scores, they're not meant to represent a company's impact on the environment or on society. They're meant to represent financial materiality to the company. If a company is behaving badly and it doesn't affect the bottom line, then it's not going to affect its ESG score. Now, ESG scores clearly do have a place in sustainable investing, but I think what we've seen very recently, and it's reflected in some of these articles that you see here, is that for mainstream investors, the objectives of ESG aren't being clearly explained. So I'd like to present a way to think about positioning different types of sustainable funds to the broad market to help them better understand these approaches. So when thinking about how to position sustainable funds to mainstream or retail investors, I think it's useful to segment objectives into two different categories. Some investors want to change the world. These are investors that, along with their return objectives, also have environmental impact or social impact objectives that they want to achieve from their funds. Now, an example of this is for institutional investors. A lot of firms have signed on with net zero commitments. So making allocations to net zero funds is a way of meeting those commitments. But the key here, what I said before, is these objectives alongside returns. Mainstream investors, most investors in general, aren't going to accept a trade-off in returns to achieve these impact objectives. So next, some investors want to change the world. Other investors see the world is changing. So what do I mean by that? These investors are less concerned about environmental impact or social impact. However, they do want to position for the opportunities being created as the world has started to make these things a priority. So with this positioning, we can more clearly align different sustainable investment objectives to different investor objectives. So I'm going to now show some examples. So I'm going to use this for illustration, some of the sustainable indices that are part of Bloomberg's global and cross-asset index offering. So Bloomberg is home to some of the most widely used benchmarks covering fixed income, equities, commodities, and crypto, for example. We also have been doing sustainable investing in fixed income for nearly a decade now and have most widely used fixed income ESG indices in the market. Now, our approach to sustainable investing, by the way, is about being agnostic to the source of data. So we want to offer choice to the market, so we work with a variety of data sources, including MSCI, Sustainalytics, as well as, of course, Bloomberg data. Now, in recent years, our focus has been expanding our sustainable index offering. And that's in particular meant creating new climate indices, new ESG indices, and new thematic indices across fixed income and equities, as well as innovating and creating new sustainable investment approaches in new asset classes like commodities. There we go. Okay, so now I want to take a look at some specific approaches that are using that positioning I just discussed, segmenting of investors. And we're going to start off with indices that are geared towards investors who are looking to make an impact, who are looking to change the world in some way. So that's going to include low carbon indices and impact bond indices, like green indices. So climate indices are focused on reducing global emissions in line with the objective of preventing temperatures from rising more than 2 degrees Celsius. They also include reallocating capital towards making a more climate-resilient global economy. These approaches, these climate transition approaches, have definitely been the fastest growing and the area where we're seeing most client interest right now globally, and also in this region. So that's in large part, in my opinion, due to what's been done by the European Commission. The European Commission they're looking to sort of create a standard in the market for low carbon indices. So they created Paris-aligned and climate transition benchmarks that have certain minimum requirements, which ensure that funds that are low carbon indices funds that are low carbon are comparable, that they're transparent, and that they avoid greenwashing. Now, Bloomberg has a family of both fixed income and equity Paris-aligned benchmarks. So what these do is they initially reduce emissions by 50%, and then they continue to reduce emissions 7% a year along a trajectory that, again, is meant to prevent temperatures from rising, in this case, more than 1.5 degrees Celsius. Now, in addition to the decarbonization objectives, these indices also require that we exclude some significant fossil fuel issuers. Now, doing those exclusions is going to change the active sector weights within the index and therefore change the risk characteristics. Now, as I mentioned before, a key consideration for impact investors is ensuring that performance is going to at least be in line with the benchmark that you're working off of. So that makes optimization a clear choice for these indices, because you can use an optimizer to ensure that you are constraining some of those risk characteristics to match the parent benchmark. Now, what we see here is that by using an optimizer, we end up with significant, very significant emissions reductions, but highly comparable risk-adjusted returns. So another impact investing approach can be found in the fast-growing sustainable debt market. Now, these are bonds that are issued by countries or governments where the use of proceeds are designated for environmentally or socially positive purposes. And a good example of these recently are COVID relief bonds. Now, you can see that this market is still a very tiny percent of the global debt market, but you can also see that it's growing extremely rapidly. Now, just last week, Bloomberg launched a green, social, and sustainability bond index that's based on our global aggregate universe. Now, unfortunately, when I created these slides, we hadn't created that index yet, so I don't really have any charts or anything to show. But the point here is that this is another way that investors can make allocations that have an impact, but also these bonds tend to perform very much in line with non-impact bonds with similar characteristics. So now we're going to switch our focus to those investors who are less concerned about the environmental impact or social impact and are looking to position themselves for the opportunities being created in a changing world. Now, some of you may be surprised to see ESG here, and you might have expected to see it in the impact section. But as I mentioned before, ESG ratings are about financial materiality. So for example, a company like McDonald's has very heavy emissions, but if those emissions aren't going to impact McDonald's in any way, so for example, there's not going to be a regulation that imposes a cost on McDonald's, then it's not going to factor in to its ESG score. So ESG scores are really linked to sustainable investing only in that the risk assessments that you're making are aligned with things like climate change and resource scarcity. But fundamentally, ESG is about risk to the company, not about impact. Now, as I mentioned before, Bloomberg has a comprehensive set of fixed income ESG indices with 3 different methodologies that integrate different ESG themes. Now, these indices are applied as, or these approaches are applied as overlays to our flagship indices like the Global Aggregate and US Corporate Index. And what you'll find here is that actually the performance doesn't deviate significantly from the parent index. Now, the reason for that could be that there is a correlation between high ESG ratings and large companies. Large companies tend to manage their ESG risks better. But we've also created optimized ESG indices that can more explicitly manage or control for those changes in risk factors with these indices. So the final topic I have here speaks to the use of thematic indices to position from the areas that are going to benefit most from the transition to a low-carbon economy. And here our index business is drawing on the expertise from Bloomberg New Energy Finance, which produces data and analysis that relates to the energy transition, and Bloomberg Intelligence, which is Bloomberg's market research arm, and they have their own ESG group as well. Now, we can expect trillions of dollars to be flowing into the new energy economy in coming years as we transition away from fossil fuels. Now, this means, of course, new clean energy sources, renewable energy sources, but also efficient ways of storing that energy. And transportation is also being transformed by a rapid adoption of electric vehicles. There's even themes like plant-based foods, where consumers are becoming increasingly aware of the impact that meat production has on the environment. So that sort of plays into the climate theme as well. Now, Bloomberg's created a wide variety of climate indices that includes electric vehicles thematic index, global clean energy thematic index, as well as specific baskets that are for wind, energy storage, nuclear, and other related themes. So again, the companies that are in these indices are going to become the primary providers of energy over the next decade and beyond. Now, obviously, there's been some certain geopolitical events recently that have created energy price shocks and have sort of shifted focus back to fossil fuels. But it's important to note that that's also motivated politicians to invest even more heavily in renewables to diversify energy sources. So now I'm just going to go over quickly 2 of the thematic indices that we've created recently. The Bloomberg Goldman Sachs Global Clean Energy Index, which aims to represent the performance of a set of companies that are expected to derive significant revenues from products and services that contribute to the production of energy from renewable sources. And the Bloomberg Electric Vehicles Index. Now, electric vehicle adoption is growing extremely rapidly right now. 30% of passenger vehicle sales are expected to be electric by 2025. So this is another opportunity in a climate-related thematic. So just wrapping up, Bloomberg's continuing to expand our sustainable index offering with new indices that address low-carbon themes, next-generation ESG themes, and new asset classes like sovereigns. We're looking forward to working with clients to realize the opportunity in sustainable investing by bringing more clarity and transparency to this market. Thank you very much.
Thank you very much for your presentation. Now we will take questions from the floor. So, Mr. Hake, please come onto the stage again, and if there are any questions from the audience, we will take questions. Any questions? We also have participants watching us live on YouTube, and they're posting their comments about the conference. And we'll see if there are any questions from the on-site participants. If you have a question, please raise your hand. So I don't see any people who have a question. So since there is no question from the audience, we will now move on to the next program. So that was Mr. Chris Halko from Bloomberg.
네, 이번 세션 패널 토론.
Now we're going to have the panel discussion. We're going to be discussing about what are effective investment strategies under uncertainties. We're going to have a discussion with participants from global issuers, index issuers, as well as asset managers. And we have invited experts from home and abroad to talk about the status of the ETP market as well as the developmental direction of the ETP. And I believe that this is an excellent opportunity for us to look at the current status of the market as well as the possible vision of the market. And we do have comments coming in from online as well. I would like to thank our online participants for their comments and questions. And we also have exhibition booth set up in the next room. And so during the lunchtime as well as the break time, please do visit the booths of our issuers and asset managers that are sponsoring the conference. So we'll now begin the panel discussion. So what are the effective investment strategies under uncertainties? We're going to be discussing about effective ETP investment strategies under uncertain circumstances brought on by inflation and the geopolitical instabilities. And we have Mr. Kim Kwang-ho of Bloomberg Index Sales, who's going to be serving as the moderator. We have Mr. Bing Fan and Mr. Jeremy Zhu and Julian Thibaud from Morningstar Indexes and Joy from Nasdaq Index and Mr. Daniel Wong from the Hang Seng Indexes are going to be participating as our participants for the panel discussion. So, Mr. Kim Kwang-ho, I will turn the microphone over to you.
For joining this KRX panel discussion. As you know, 2020 has been a very challenging year for everyone. We had COVID, rising interest rate, inflation, also increased geopolitical tensions. So in this highly uncertain economic situation, investors will need to have more just clarity on the most efficient strategies. For this major topic of discussion, joining us are 5 experts from across the industry, such as index vendors and asset managers. They will share their insight on these questions being asked by many investors today. So before we get started, I will introduce myself as well. I'm Keno Kim from Bloomberg. I'm senior sales specialist from Bloomberg. So for anyone who doesn't know Bloomberg as an index provider, you just saw a great presentation on green economy from my colleague, Chris Halko. Also, I'm very grateful to KRX having this chance to moderate this session today. 안녕하세요. 블룸버그에서 인덱스 세일즈를 담당하고 있고.
Good morning. My name is Kim Kwang-ho. I'm responsible for the index sales at Bloomberg.
So virtually, we will have our virtual guests introduce themselves first. As also you can see, each of our panelists works with well-known industry from our industry. So we'd like to have a chance to share a little bit about their firm's offerings as well. So, Bing, why don't you get us started?
Thank you. Good morning, everyone. My name is Bing Fan. I'm the head of International Index Department from EFund Hong Kong. Thanks to KRX for having me here today, and congratulations to the 20 years anniversary. EFund Group is the largest asset managers in China, and also one of the largest ETF and index mutual fund managers in China as well. As an extension to EFund, global footprints, EFund Hong Kong index team issues and manages ETFs domiciled in Hong Kong markets, that including the ETFs tracking China A shares performance and the H shares performance as well. It is my great pleasure here today to join other panelists for this session. Thank you.
Thank you. Daniel, how about you?
Thank you, Kendall. Good morning, ladies and gentlemen. I'm Daniel Wang, the Chief Index Officer at the Hang Seng Index Company. Thank you very much for Career Exchange inviting me to participate in today's event, the 2022 Global ETP Conference Seoul. Hang Seng Index Company is a wholly owned subsidiary of the Hang Seng Bank. Beside our flagship indices, the Hang Seng Index, the Hang Seng China Enterprises Index, and the Hang Seng Tech Index we launched 2 years ago. We are actually compiling over 1,600 indices, which cover stocks listed in Hong Kong, mainland China, and U.S. listed Chinese companies. Currently, there are 117 exchange-traded products linked to our indices with listing on 16 stock exchanges across the world. The total AUM tracking our indices has exceeded $50 billion. Actually, Hang Seng Index has been taking part in the Korea ETF market since 2007, when the ETF tracking our Hang Seng China Enterprises is first listed in Korea. In the coming years, we look forward to joining hands with Career Exchange to further enrich the product offerings to Korean investors. Thank you very much.
Okay, thank you. Next, let's move on to our guest on stage. Joyce, could you share about yourself?
Thank you, Carlo. So this is Joyce Ip at NASDAQ. I'm the head of APAC Index Licensing at NASDAQ Global Indices. It's my pleasure joining this panel discussion today. So NASDAQ has been offering the customized index solutions to clients. We talk to investment managers, insurance companies, banks to creating index-based strategies. NASDAQ has been creating indices for over 50 years now. So today we're calculating more than 40,000 indices. We have global equity coverage and also other asset classes, fixed income, options-based solutions, and digital assets. Thank you.
Thank you. Okay, Julian, let's go to you next.
Good morning, everyone. It's a pleasure being here. My name is Julian Thibault. I'm a director for Morningstar Indexes. I'm leading our initiative on the derivatives product, so essentially creating index solution for structured products, total return swaps, and futures and options. Morningstar Indexes has been in the indexing business for over 20 years and rely heavily on the Morningstar ecosystem. So we've acquired through time many companies such as Systemalytics, PitchBook, and so on, which enables us to articulate index solutions for the linear and nonlinear space across the globe.
Thank you. Okay, Jeremy, how about you?
Hi, this is Jeremy from FactSet. I'm the head of Index Solutions. FactSet has been around for 40 years, and we are a listed company in the US. We're also a part of the S&P 500. We are a new player in the index space. We mainly focus on thematic and ESG index. Since we started the business about 6 years ago, we launched over 140 indices, of which about 100 of them are used for ETF listing around the world with about 30 billion in AUM. Thank you.
Okay, thank you, Jeremy, and all guests. This sounds a really all great product. Okay, now let's get to our questions for today. First of all, on the client side, under this market volatility, what ETP strategies do your client currently consider the most efficient? And further, what will be the driving factors behind such a strategy? Okay, let's start with the on-stage guest first. Julian, what are your clients saying?
Thanks, Keno. I think it's a very interesting question. There's clearly a lot to say about the current macroeconomic environment. I think 2022 is a disruptive year. A lot of assets are getting repriced, pretty much all of them. And uncertainty is fueling volatility. Therefore, we find as an index provider, it's a great time for us to engage with our clients in order to provide and discuss alternative approaches. We've seen a swift changes in the asset flows in the ETP space, notably in the ETF space. And let me perhaps give you two examples in order to illustrate that. The first one would be more tactical, tilted towards a more of a short-term approach. The other one, much more strategic, tilted towards a positioning towards a medium to long term. So from a tactical point of view, I guess we heard it before, inflation and commodity pricing. So we've seen a real gain of interest in a global upstream natural resources, which we have an index, a lot of asset flows, but also from a performance point of view, it's been outperforming the market significantly. The reasoning behind this is it's a very simple one. It's a sector play. So essentially what you do is you select companies that are involved in energy, agriculture, water, metals, could be precious, industrials, and so on. The idea behind this is essentially looking at the imbalance in the commodity market between supply and demand. And on top of that, obviously, we've got the geopolitical events which have been fueling this inflation. Therefore, this strategy proves to be, at least in the short term, a good diversification tool, but also a hedge against inflation. The other example I got for you is around dividend, so which is much more strategic, and you're looking at the medium to long term. It's a great strategy. Everyone knows it. Everyone loves it. However, given the current macroeconomic environment, this strategy may be challenged in some ways because of dividend traps. So dividend trap is essentially when you select systematically companies with high yield. However, from one day to another, the dividend payments disrupts. Either it kind of reduces or it gets canceled. You tend to pay premium for those stocks and therefore getting into a trap. So one way to address that is by adding filters to it, to that systematic strategy. And this is what we're doing at Morningstar. So essentially what we do, we leverage our equity research and apply those filters into the index selection. So we look at high div names, obviously, and then we look at moat rating. So we're looking at the quality of the company. How good is that company in the future? How would it look like from a competitive advantage against its peers? Then we look at the distance to default, the probability that the company would actually go bankrupt potentially, hence not paying dividend. And then the valuation. This is just to give you an example that pure dividend investing is clearly a great strategy. However, in the current environment, our clients tend to look at a much more sophisticated approach through strategic beta.
Okay, thank you, Julian. So basically, inflation play and dividend yield strategies, right? So okay, that makes a lot of sense. Okay, Joyce, are you also observing similar trend in the market?
Sure. The past 9 to 10 months has proven to be the most challenging environments for investors to navigate in decades. Interest rate highs and almost all asset classes suffered during this period. The overall AUM tracking our US indices, global thematic indices, has actually dropped to reflect the market adjustment. But I mean, at the same time, we are seeing some net inflow into our products, tracking the Nasdaq 100 from markets like Australia, Japan, Korea, and Taiwan. The Nasdaq 100 with its high concentration on the large cap innovative companies fueled the outperformance of the index in the past 15 years until the end of last year. So when investors tend to believe these high growth sectors, technology are more vulnerable to rising interest rate, inflation, there are some investors seeing this as actually as a buying opportunity. When we talk about the driving force, first of all, the US equity market is always an important element for asset allocations for global investors. And also, the driving force is also explained by the recent research piece that we published recently. Our research team looked at a combination of factors, how Nasdaq 100 respond to this combination of rising inflation, rising rates, and also the weakening economy. we saw that, the overall, the clear indications is that the fundamental strengths of companies in the Nasdaq 100, comparing to other U.S. Equity benchmark, for example, the total debt ratio, the interest rate burden, actually they're lower for companies in the Nasdaq 100 comparing to the broader U.S. large cap space. And with a combination of the structural advantages, suggested that actually the Nasdaq 100 is better positioned to withstand the long-term high interest rate environment. Thank you.
Yeah, okay, thank you. So Joyce, so it's a really good timing to invest in tech stocks now. Yeah, okay, yeah. So then let's hear from FactSet. Just Jeremy, could you share your insight?
Sure. So when we look at our investors, we don't look at them as like a single entity. We look at them as sort of multifaceted. And I would say generally they are broken down into like 3 categories. So the first category is I would say they are more low risk tolerance and focus on more of a short term. So for those kind of investors, they tend to focus on more of a cash equivalent type of strategies. So something like where we like a US Treasury bills, like very short term. And they would just try to wait out the volatilities and then to see some signs of, like the market's bottoming. So I think you have one group of investors that are taking that approach. And then there's another categories of investors that I would say they are sort of like a medium tolerance risk appetite with a long-term horizon, long investment horizon. And I would say that category of investors, they tend to have a more of an asset allocation approach, meaning they have a predetermined type of asset allocation, across different asset classes like equities, fixed income, real estate, commodities, currencies, but they tend to be more stable. So they're going to have a more defensive allocation approach given the environment, but they're not going to do a lot of very dynamic technical changes. That would be the second categories. And the last categories I would say are the investors that tend to be more, I would say, higher risk appetite, short to medium term time horizon, and they tend to be more dynamic and tactical, where their focus is try to maybe anticipate what will do well and will do not so well, and they're trying to go long and short those sectors or asset classes. So for example, they might go long in the last year like energy, oil, natural gas, and commodities, and go short the tech-related, innovation-related type of equities, as well as maybe some consumer discretionary. And then there are also pre-packaged strategy, I would say index strategy, ETF strategies that sort of already bake in those strategies. So, there's definitely ETF products that have done pretty well even in this environment, delivering between 10 to 30% year to date based on these more dynamic technical rotations. So I'm not going to identify any tickers, but if you're interested, feel free to come talk to me later.
Yeah, thank you, Jeremy. So yeah, just many interesting strategies. Yeah, I agree with you. Just there are many different investors with a different appetite. So okay, so far those observations are from index vendors. But what about ETF providers' perspective? Bing, just could you share? Are you noticing the similar things from the market as well?
Sure. So I do notice the same trending echo to a great extent what other panelists has been shared. So year 2022 is a very challenging year, and this year the market is facing the PE valuation contraction, and now is evaluating the impact actually on the fundamental earnings from listing companies. That's why many investors talking about regime shifting this year about investment. And based on our client conversations and observations, many institutional investors, their challenges this year is coming from 2 angles. Number one is that in the inflation environment, how to find the real yield, meaning the nominal yield dividing the inflation. Number 2 is how to manage volatilities given the target about real yield. And based on our observations, and I see the institutional investor this year focus on, number one, they start playing defensive. You can see that from their increasing cash level in their books. And they're looking for high quality fixed income solutions. They're also looking for cash flow driven yield play investments. That's including dividend. That's including real property REITs solutions, which sitting in between traditional equity and fixed income. And they're also looking for stocks having a strong balance sheets, basically do a quality play. And they're also looking for stocks having lower valuation and basically giving them kind of a safe haven, a relative safe haven in their books. The other trending we see is the strong policy tailwinds start playing a bigger role in this year's investment. This year, everybody noticed it's a very macro events driven year. So many of the driving factors to the markets is not coming from the individual security level. It's from the policy, geopolitical issue, many is on the macro level. That's why many people actually turning to index solutions and ETPs for their investment to time in the markets. So for strong policy tailwinds, some of the area we noticed, such as people start reducing their exposures to long duration equity strategies. That's to a great extent related to the technology sectors, because they are quite sensitive to the rates change, interest rate change. And in the other hand, investors are still care about climate. They still having a great interest on ESG. And also they're looking for the energy transition opportunities, not only from the new energy, but also from the traditional energy transition areas. That's the things that I'd like to share. Thank you.
Thank you, Bing. Just quite many interesting ideas. Just you mentioned that the equity short duration strategy as well. So actually, just our firm is also working on just that type of the index concept now. So just could you elaborate a little bit more about that equity duration strategy for the audience?
Yeah, I mean the equity duration. I'm turning to measure how sensitive the performance is related to the interest rate change. So this is a very similar concept to the fixed income durations. So typically, if a company having a strong cash flow, it tends to have a lower duration. Otherwise, it'll be a bit of high duration or long durations, which are quite sensitive to interest rate change.
Okay. Thank you for your explanation. So that's quite an interesting concept. So in the interest of time, let's move to our next question. We've just talked about our current conditions, but now let's look to the future. Considering expanding market volatility, what trend changes are you noticing in the ETP space? So where do you see the market heading in terms of index and product development? So, Daniel, let's start from you this time. So, what do you think?
Thank you, Kendall. In volatile markets, just like the past 1 or 2 years in Hong Kong or China, investors are generally looking for defensive products. Among all, just like what other panelists shared, high dividend yield has been a popular theme in the past few years. And according to our research, actually, dividend yield is one of the effective factors for the Hong Kong and China A market. Generally speaking, the index idea is to select securities with relatively high and stable dividend yield in the index universe, and for sure, we introduced some mechanism to avoid the dividend trap. We launched our first high dividend yield index back in 2007. Since then, we have been launching different versions of high dividend yield indices covering Hong Kong listed securities and A shares continuously to meet the market demand. According to the historical index performance, high dividend yield index could provide a relatively stable performance and higher dividend yields return in the volatile market, just like the year to date. On average, it outperformed the major benchmark by say around 10 percentage points. If you are talking about the future, in the future, we believe that China should continue to be a key focus. In August this year, we launched Hang Seng Stock Connect China Enterprises Index, the HSCEA, which is an extension of our flagship index, the Hang Seng China Enterprises Index, CEI. The construction of the index is to combine the southbound stock connect eligible HSCEI constituents with large cap A shares that are eligible for northbound stock connect trading. The 80 China A shares and Hong Kong listed Chinese companies provide a comprehensive portfolio with a balanced mix of industries, which could not be provided by either Hong Kong listed Chinese company or China A shares alone. When compared with the HSCEI, our flagship, the index did a better return with a lower volatility in the past few years. It's because it got a more balanced mix of industry and which could deliver a better return historically. That's my sharing. Thank you.
Okay, thanks, Daniel. So high yield strategy, and also especially just China focus for the future, right? So okay, then how about you, Joyce?
Thank you. We see the downturn in the thematic indices. So some of the traditional sectors, including semiconductors, biotech, cooling. Recently, our clients are requesting for indices like the inflation protection features and indices that can generate alpha and better yield. In general, they're looking for indices with better outcome. For example, that tremendous interest on the options strategy solutions based on our Nasdaq 100, where investors can get additional income from the core option from the strategy. So, recently there are products listed in Japan and Korea. In addition, I think the ESG is also an important area for index development. And we have been including ESG screenings in some of our thematic indices. Thank you.
Yeah, thank you, Joyce. So ESG and thematic things. So so you also mentioned that ESG and climate trend before. So do you have anything to add on this?
Sure. So from my end, what I see is this year there's a higher adoption ratio on using ETP. This is not only just from the institutional players, but we see the retail players are having a much bigger portion on the ETP ownership and especially the trading volume. And this is pretty much given currently the macro level uncertainty, and that's become really challenging and really hard to using individual stocks to time the market and doing the market rotations. That's number one. Number two is we see the investor behavior or start showing buy the dip behavior. This is actually quite consistent what we see in the past few years. Basically, when the markets dropping down for a significant level, the investors started buying the dip and hoping for the market turning around. And for the short term, this behavior coming mostly towards the broad market indices, because for this year, many indices already had a significant drawback from their peaks. And I think in the mid or long term, I'll see number one, there will be a growing demand for thematic index productions because the world today and the investment world today has becoming more complicated. The traditional sector-based solutions may not be sufficient enough to serve the client needs. And that's why many clients are looking for the thematic index productions. The other one is again, also cash yield driven for the defensive player, and also the ESG solutions for the institutional investors that looking for a sustainable return and investment goal. Thank you.
Thank you, Bing. It seems like thematic indices will draw attention, keep drawing their attention next year as well. So, what about Morningstar, Julian? Are you seeing the similar trend change in the just something, or are you working on anything just to meet that kind of future demand?
I think there are two elements in your question. One with regards to volatility, how we deal with it from an index provider point of view, and the other one about the future of product design. So I'm just going to tackle one and then the other one. From a volatility point of view, I think every single index provider is out there. I got different methodologies that enables us to dampen the volatility through a multi-asset approach. So you combine fixed income and equity, target volatility, or you can even go down the route of the optimized approach with mean vol strategies. What we see with clients when we discuss with them, it's the tolerance to volatility and the way people are accepting volatility is very different from let's say, an institutional client down to a retail client. Therefore, it is very important when we discuss and when we build those methodologies to understand what's the investment goal and what is the time profile. How much time have we got? And then based on that, we'll play around with the methodologies in order to achieve certain volatility targets and levels. Now, to come back on your point around product development and product design, where is that going from an index provider's point of view? At Morningstar, we're taking a long-term view in the way we build our strategies. We feel that clients are much more thoughtful, and they're looking for much more robust strategies with unique capabilities. And on top of that, they're also looking for customization and quick time to market. So I'd say that the index providers are being heavily challenged in that respect. A lot of us, I got the same data, pretty much the same methodology. Well, guess what? You're going to end up with the same results. Therefore, the future is really going to be around whoever's got the edge data, research, and capability to turn this around. And I think you're right saying one of our panelists talked about sector and sector limitations when it comes to tackling thematics. That's the case. I believe that those approaches are pretty much gone, and investors are definitely looking for new approaches. In that respect, I'll give you an example. Morningstar will leverage our equity research. So we've got a team of 150 analysts, which are fully independent, that score in a forward-looking manner. So basically, we ask those analysts whether in the future or not, those companies that they select will benefit from an impactful way of giving a specific theme. And that is very well received, and people are definitely looking for new capabilities around thematics, but also across ESG and so on.
Thank you, Julian. So it seems like everyone already agrees on thematic and ESG as a future trend. So Jeremy, any different view from FactSet?
I don't have different views, but I would say I think this year a lot of maybe in the audience, investor felt like the market is in bear market, so the development of ETP or ETF must have been slowing down. But if you actually look at the US alone, so far we're on pace to launch it's already more than 300 new ETFs this year, 2022, which is similar to last year. So the pace of new ETF, new ETP product launching is definitely not slowing. So that's definitely something that I want to point out. And then from a more personal experience, in terms of our clients, we actually haven't really seen a slowdown, surprisingly. So all the indices that we built, in advance, they were following through with the actual ETF launching. So we were we've seen ETF launch this month, last month, previous month. So even though the market was not great, a lot of these issuers are committed to launching products. So I think that speaks to the strength and the secular trend behind ETP as a whole. In terms of themes, which is something that FactSet focus on, there's definitely a switch, right? So a few years ago, we see a lot of innovation technology requests from clients. And then I would say the last 18 to 12 months, we're seeing a shift from more, I would say, energy, in particular, alternative energy. So alternative energy, when I say that, it's not just clean energy or renewable, the more transitional ones like natural gas or nuclear. I mean, we're seeing those as well. as well as some of the enablers, like a lot of the metals that are essential, like copper and lithium. All of those are actually being requested as well. So that's definitely, you see like a thematic rotation there. And I think the market has been shifted so far that where issuers are very sensitive to market trends. And they're trying to plan for what's next in a very fast manner. So I think the challenge for index provider when they're building, in terms of index design, they're going to rely more and more on alternative data, big data, machine learning, NLP, AI. All of those will have to become part of the toolkits to create these thematic indices in a very efficient, fast turnaround manner, because the issuers are definitely compressing, the time to launch schedule. So, we see, sometimes, maybe a few years ago, you have, 3 months, 2 months. Now the product design can be compressed to 4 to 6 weeks. So you really need to look at the operation, your index development operation, and make sure you try to streamline, automate a lot of the workflow and leverage technology and like different types of data set as much as possible.
Thank you, Jeremy. Very, very interesting ideas. Yeah, so very insightful. Unfortunately, that's all time we have today. So just we need to skip some of the discussion we prepared. But I'd like to thank you all of our panelists today, and also please feel free to contact them directly if you have any further questions. So once again, I'm Ken Kim from Bloomberg, and thanks again to KRX, and thank you everyone so much for being here today. Yeah, 대단히 감사드립니다.
감사합니다.
Thank you very much.
Next question. 네, 감사합니다. 너무나 훌륭하게 잘 진행해 주셔서.
So thank you very much for your participation for the panel discussion sessions. So we were able to obtain valuable insights. So that's the end of the morning session of the Global ETP Conference Seoul 2022. Now we will have lunch break until 1:10. You can enjoy the lunch or the buffet prepared just outside this hall. I hope that you enjoy your lunch and please be back by 1:10. Also make sure that you visit the exhibition booth. Thank you.
안내 말씀을 드리겠습니다. 2022 글로벌 ETP 컨퍼런스 서울 이제 오후 세션이 곧 시작되겠습니다.
The afternoon session will begin shortly. I'd like to ask all the participants to kindly proceed into the hall and take your seats.
Your attention, please. The afternoon session of 2022 Global ETP Conference Seoul will begin shortly. So I would like to ask you to come in and have your seats. Thank you. 네, 다시 한번 안내 말씀드리겠습니다. 저희 컨퍼런스 이제 오후 세션 바로 시작합니다. 여러분 이제 모두 행사장 안으로 들어오셔서 착석을 해 주십시오. 네, 그리고 휴대폰의 상태도 점검을 해 주시기 바랍니다. 오후 세션에도 역시 동시 통역 서비스가 제공이 됩니다. 테이블 위에 놓여진 수신기 사용하실 수가 있겠고요. 채널 1번 한국어, 채널 2번은 영어로 맞춰서 사용할 수 있습니다. May I have your attention please, ladies and gentlemen? The third session of 2022 Global ETP Conference Seoul will begin very soon. Please enter the hall and have your seats. And also please make sure that if your cell phone is on silence mode. We provide you the simultaneous interpretation service throughout the conference. Please have your receiver at your desk. Tune to channel 1 for Korean and channel 2 for English. Thank you. 네, 자 저희 오후 세션 약속드린 시간이 다 되었기 때문에 바로 시작하도록.
We will begin the afternoon session right away. Welcome back. We will begin the third session of today's conference.
는 ETP 시장 발전.
The topic of the third session is the evolution of ETP. And in this session, we'll have discussions on the future directions of ETF and ETN. And now I'd like to introduce to you the first speaker. The first speaker is from Samsung Asset Management, and Mr. Im Sang-baek will make the presentation. So Mr. Lim.
안녕하십니까?
Good afternoon. I'm responsible for the management of the listed products at Samsung Securities. My name is Sang-baek Lim, and I would like to thank the KRX for giving me this opportunity to make the presentation. This is the most prestigious conference here in Korea when it comes to EPT, so it's truly a pleasure and honor to be able to make the presentation here. The title of my presentation is called All About Commodity ETNs. I'm going to talk about the big issues in the Korean ETN market, and I'm going to also talk about what needs to be done in order to better develop the ETN market here in Korea. So let's look at the current status of the ETN markets here in Korea. ETF is celebrating 20 years of its existence here in Korea. And so the ETF is a role model for the ETN market. And I would like to congratulate everyone involved in the ETF market for all the success that they have achieved. And ETN market opened back in 2014 with 10 listed ETFs by 6 companies. Now the number of issuers has increased to 10, and the listed ETNs has also increased to 300. And the AUM, or the balance, is about 700 billion won, and the market cap is about 10 trillion won. But if you exclude what the LP holds, the actual balance is about 700 billion Korean won. And so that's only 1% of the ETF market, and daily value is about 100 billion won, which is about 3% of the ETF market. And the ETN that is more active, so this is the top 10 of the most actively traded ETNs, and they either track commodities or are leveraged products. And the products of the inverse 2X ETN is the only product that has more than 100 billion won worth of AUM. And so the ETN market as of now is relatively small, and about 70% of the AUM and about 80% of turnover are based on natural resources and oil and the crude oil. So it seems that the people are only interested in ETN if they want to invest in commodities. And the products that the investors prefer are leveraged products. They account for 80% of the total ETN products. How about global ETN market? ETF. The gold futures was first listed in the United States, and then ETN based on the agricultural product has listed. So in the oil linked or oil price linked ETN is the most popular or actively traded ETN product in the United States. And so ETF already has all the underlying assets covered, and that is why ETN had to try to differentiate itself, and that is why it has decided to focus on energy futures. And also the ETN is also better suited to the energy investors that prefer high risks and high return. So what makes ETNs attractive to investors? I think there are 3 reasons. And Samsung Securities looked at and asked their customers. ETNs are very sensitive to the global assets. When you're looking at the trend of the crude oil futures from 1983 till now, whenever there are big global issues, there was immediate movement by the crude oil futures. And due to COVID-19, there was a decrease in demand, there was a decrease in the crude oil price. However, with the Ukrainian and Russian war, the crude oil prices increased. And same with the natural gas. So they had the price of it has peaked. And so in the commodities market, there was a lot of price volatility. And so individuals, the retailers, for them to buy and to sell and to make returns would be made possible through the ETNs that are based on the commodities. So that is why the commodity-based ETNs are popular with the retail investors. And also the natural gases are related to climate, where the natural gas, as you know, becomes more expensive in the winter time. So investors with the less efforts can anticipate the prices better when it comes to natural resources, and that is why they believe that they can make profit or the high returns with the ETNs that is linked to natural resources or the natural gases. And the investors that want to make short-term returns, the leveraged ETNs are quite attractive. And ETN has a strength in terms of having different ratios of leverages. And so in the ETN market that has become popular or has attracted attention in this year are all related to commodities. And there was an increase in terms of disparity. Since the war broke out between Ukraine and Russia, the crude oil price increased dramatically, and the investors invested in inverse 2x products because they expected the price to drop. And so the issuers, based on the product that they have already listed, they can sell the product, but the inventory was not enough. And so investors, as long as they make a return, no matter what the price they buy, and so they bought the products or they traded products about 20% more expensive than the so-called the normal price, and so there was a disparity. And so when the disparity returns to normal, there is going to investors may experience losses. And we had a similar experiences back in 2020 with the crude oil prices. And so thanks to issuers additional listing and the actions by the authorities, this disparity between prices this year was corrected rather quickly. And nickel price in this year, there was a day when the price increased by about 62%, and so there was so the ETN that is a minus 2x nickel ETN had to suspend trading. However, ETN does not go below zero, so that was an advantage. And investors, they have to, of course, accept the risks that comes along with high returns with products such as minus 2x nickel ETNs. And these commodity leveraged products, the prices are very volatile in terms of price. In case of crude oil, 2X product was once traded at 100 won. And so if the price is very small, then you would not be able to track the theoretical price, and there will be many side effects. And since and anything that goes below 1,000 won, so early redemption is needed, and that's why back in 2020, early redemption system was introduced in Korea, and this was first applied to the inverse 2X crude oil ATM product, and for minus 1X XIV in the U.S. And in 2020, crude oil tracking price product had to be redeemed early on because of very dramatic price volatility. Of course, if you could meet you may wonder, or the investors are questioning a forced redemption. However, there are some who believe that there has to be early redemption. So even if there's an early redemption, the theoretical price is going to be returned to the customer's account. And so this was a characteristic that is not seen with ETFs. And so this was one of the reasons that the ETF became more known to the investors. And so this sort of event, which may be considered as negative, we do see number of ETN investors increasing. And that is because KRX and the industry are working hard in order to promote ETN, and their hard work is paying off. I hope that ETN market will be a market that investors can trust and also use to make profits. And then we will have to continue to provide continuous education to investors. And so early redemption and the rollovers, the compounding effect, and the disparity issues will have to be understood by the investors. And I believe that investors have to have good experiences with the ETN market for the ETN market to continue to develop. And also the system needs to be improved. And the ETN that is about 100 won is issued at 10,000 won, and so that the investors believe that they have bought the product at a discount price. And I think this has to be corrected. And if this is corrected, additional provision of the product will be made possible, and we can also decrease the disparity gaps. And in the ETF is already covering most of the underlying assets already, and for the ETN needs to have a product that can differentiate itself. About 3X leverage product linked to Nasdaq could be quite popular. Now Korean investors are investing in foreign exchanges, and about Korean investors have invested in 3X Nasdaq product, and so that was the most popular product with Korean investors. And so plus minus 3X products equity products are the products that are most popular with the Korean investors. And so as Korean investors are investing in 3X products in the overseas markets, and so if we could have a similar product released or listed here in Korea, that would be beneficial for the Korean investors as well as for the capital market. If the Korean investors are going to invest in other markets, they have to first have their their currency exchanged, and that is going to be additional cost. And so if we can have these products listed here in Korea, so there will be the foreign reserve related stability maintained, and will also help the investors save costs as well. ETN is a much smaller market compared to the ETF market, and ETN may continue to be smaller than the ETF. However, I believe that ETN definitely has a role to play when it comes to the capital market, as well as our investors' investment portfolio. I hope that you will continue to give us your support, and I hope that you will remember Samsung ETN. Thank you very much.
팀장님, 저희
Thank you very much. So we will see if there is any question from the participants. So it was a comprehensive presentation on ETN. Any questions? No questions? So thank you very much once again for the wonderful presentation. Now we are going to listen to the next presentation. And the title of the next presentation is the 2022 US ETP Market Trend and Strategies. Of course, the US is one of the biggest ETP markets in the world, and Mr. Zhuang Bui, head of US Exchange Traded Products from NASDAQ, will give us a talk on the US ETP market. So Mr. Bui is on this, Miss Bui is on the stage. So please go ahead.
Thank you much for the KRX for putting on this amazing conference, and thank you for having me here today. So I'm Zhang Bui. I'm head of the U.S. Exchange Traded Products at NASDAQ. NASDAQ is a global technology provider servicing the capital markets and other industries. My colleague Joyce was on a panel earlier, gave an overview of our index services. On the ETF listing side, we are home to over 500 listed ETFs from over 50 issuers. So today we're going to talk a little bit about the U.S. ETF market and some of the trends and strategies that we're seeing. So a lot of the panelists and speakers before me have really talked about the tremendous growth that the ETF industry is experiencing, especially since 2020. The volatility during COVID has really promoted the adoption of ETFs, and the US market, really, we've seen a similar story. So looking at, we really have seen tremendous growth over with the 10-year CAGR of over 20%. So today, there's over $6 trillion in assets under management for US-listed ETPs, and there's over 3,000 ETPs in the US now. And that's coming from just 5 years ago, the number was at 2,000 ETPs. So really, you see an increase in number of products that are listed. Looking at net inflows into ETPs, despite the market volatility and everything that's happening in the market, you do see AUM being impacted. But in terms of net inflows, you're still seeing that it's very strong. Year to date, there's been over $400 billion in net inflows into US ETPs, and we're on track for the second best year ever in ETF history in the US. And the number of launches, as one of the panelists in the previous one mentioned, we're continuing to see a strong pipeline of launches. There's been over 300 new launches in the US year to date, so we're on track for potentially another record year, on pace with last year's record. But we're anticipating this growth to continue. A recent PwC survey had projected that ETP assets to double by 2026, hitting 13 trillion assets. BBH also put out a US investor ETP survey, and 88% of investors anticipate to increase their usage of ETFs. And so another trend that we're seeing is mutual fund to ETF conversions, and we're also going to see that to be another driver of ETF adoptions. ETF assets is a third of mutual fund assets in the US, but you see ETF inflows to be 5 times the amount of mutual funds over the past decade. The first mutual fund to ETF conversion happened in the US in 2021, and since then you've seen a handful of other issuers to convert their products, and we're going to see that to continue in the future. And Bloomberg had projected 1 trillion in mutual fund assets to be converted into ETFs over the next decade in the US. So what is driving the US ETP growth? Really the first thing is about modernization of regulations. So there have really been a number of regulatory changes that have really helped streamline the launch process and really reduce the cost and the barrier to entry and really promote product innovation. So the first one is around the SEC ETF rule that has been adopted in 2019. So that really leveled the playing field for ETF issuers in the US to launch their products and really streamline that process. And in addition to that rule, in accordance with that, all the US exchanges have adopted listing rules to harmonize the exchange's listing rule and the SEC rules to be similar so that there's really one gatekeeper when it comes to ETF regulations. And then the third piece is around, and really helps further spur the growth of actively managed ETF, is the approval for actively managed ETFs that do not have to disclose their holdings on a daily basis, which we also call semi-transparent ETF. And this has really helped a lot of mutual fund managers who have concerns about the daily transparency have the comfort to enter to the market and provide their strategies in an ETF wrapper. The second and third piece is about increased adoption across different segments of ETF usage. While the financial advisors and the wealth channels continue to be the power users of ETFs in the US, retail and institutional adoption really has increased over the past few years. So looking at retail adoption, you really have seen it accelerated since COVID, and that retail activity is expected to stay. It really has been accelerated by digital platforms. A lot of the brokerage platforms is offering commission-free trading. You can trade directly from your app. There's robo-advisors. There's really a lot of different digital wealth platforms that are helping retail investors increase their usage of ETFs. The other piece is about institutional growth of their usage. So when ETFs proved their resiliency in March of 2020 and became a source of liquidity for institutions, particularly in fixed income, that really has helped spur their usage of ETFs. And that spans beyond fixed income. But you also see that regulatory changes is going to help accelerate the usage for institutions in ETFs. There are things around taxes or a capital-like treatment that's going to be able to allow insurance companies to use more ETFs in their funds. And really, they're turning to ETFs to be building blocks in portfolios. There's efficiencies in ETFs, and there's tax benefits that really help them manage their portfolio for their clients. And then the fourth piece about it is about the demand for ETP products to access a variety of asset classes. So you're seeing demand from across all different types of segments of investors to have the strategies be in the ETF vehicle. Things about, they're not limited to some of the things that we've listed here, but low-cost core, broad-based exposure continue to really be a focus for ETF usage, but you're seeing more in active management, ESG, fixed income. A lot of the previous panels I talk about thematics as well, digital assets, model portfolios. So really the opportunities is endless. Every time we think that the ETF industry is sorry, now we have 3,000 products, like where else does it go? But their innovation continues, and that's what's really exciting about the ETF product and its wrapper. So in terms of trends of flows and launches, so looking at flows, there's been about 400 billion in inflows year to date into ETF products. Majority of it is going into US equity, with US fixed income being number 2 in terms of percentage. And then looking at net expense ratio, more than half of inflows is going into ETFs with less than 10 basis points in expense ratios, even though they only make up for 7% of the launch of the overall universe. So you continue to see a concentration in inflows into things with lower expense ratios as well. So launches-wise, we talked about how it's a very strong year for ETP launches. There's been over 300 new launches year to date from over 100 issuers on 3 different exchanges. And many of those 100 issuers are new entrants into the ETF space. There are many mutual fund companies that are entering the ETF industry for the first time, and they're launching active strategies. So firms like Capital Group, Dimensional Fund Advisors, they're entering ETFs into a big way. And if you're looking at in terms of what type of strategies are being launched, my colleague Rob Morocco from SIBO talked about this in his update, but you really see the growth in active management over half of the launches this year have been actively managed. And it's really a way for, as investors look for exposures that are beyond beta, they do turn to ETFs as a way for product innovation, differentiation in their product launches as well. It's also because from a regulatory standpoint, with the new ETF rule from the SEC, there is no differentiation when it comes to exchange listing rules, whether something is passive or active. So you really have seen this trend in the growth of actively managed, and it's still very early days for active. We've seen tremendous growth in active asset under management over the past few years. There was about 100 billion in active ETFs in 2019, and that has tripled to today about 300 billion, and that's expected to grow. And whether that's active fully transparent, or you're seeing strategies that are coming in that do not disclose their holdings on a daily basis, but we anticipate that to continue to be a strong area of growth for ETFs going forward. Asset class-wise, equities dominates in terms of what type of products are being launched, but you also see fixed income to be a popular in terms of product launches as well. Especially in this inflation environment, people are looking for income. There's cash solutions that are being wrapped into the ETF wrapper. And then in terms of the, what type of strategies it is, like we talked a lot about thematics and ESG, those are going to continue to be key area of focus for folks to be able to really invest in themes and socially responsible and climate change, really be able to really invest in what they believe in. But what we've also seen a trend in is, I think it's long gone the days where ETFs is synonymous with broad-based passive exposure, and what we've seen is, in addition to active, but we also see products that are providing much more specific and targeted exposure. So this year, for the first time in the US, that there were single stock ETFs that were launched, and then there were also single duration bond ETFs that were launched. So really being able to give investors the ability to invest into that one exposure that they're looking for. And then, so, in terms of what's next, like what are we looking for, things that we are paying attention to in terms of the market structure and regulatory framework. One of the biggest things, the SEC has a very packed agenda in the US. There's a lot of initiative, a lot of rule proposals that they're putting out. One of the biggest things that we're looking from an ETF standpoint is the SEC's review of the US equity market structure and potential rulemaking. An ETF is a subset of the US equity market, so anything that's impacting the trading of equities is going to impact ETFs. And there's, really, we're all looking forward to seeing what the rule proposal would look like, but the SEC Chairman Gensler has, put out certain comments as well as speeches that are related to the NBBO, tick sizes, order competition, exchange pricing, and so forth. So that's something that we're going to be looking very closely to see how that impacts the trading of ETFs in the US. Because one of the big things that exchanges provide to ETF issuers is around ETF liquidity support. So we have incentive programs to help really promote the market quality and the trading of ETFs, especially new and thinly traded ones. And then the second piece and third piece is around just different proposals and disclosures that are related to ESG funds, or their fund names. There's a potential for additional disclosures that will be required for funds that are ESG focused to come to market. And NASDAQ did submit comment letters amongst with other folks within the ETF ecosystem around these rule proposals, really raising the fact that we want to make sure the SEC is considering the additional complexity that might arise from some of these proposals, and if there's any additional costs and burden to the issuer could potentially impact the end investor. So while transparency is very important, but we do want to make sure that they keep in mind the additional complexity that it might come. So there's a lot of exciting things that are happening in the ETF market globally, and especially in the US. And some of the things that some of the previous panelists has also talked about is around digital assets, and we're all looking for that first Bitcoin ETF to be able to come to the US. And those are all things that we're considering for the future. And we're looking forward to working with the ecosystem to continue to advocate for the growth of ETFs in the US. And so thank you so much for having me. That's an update on the ETF market.
Yes, thank you very much. 네. 미국의 ETP 시장.
So there was an update on the US ETP market, and we also had some discussions on the future trends of the US ETP market. So we will see if there is any question from the participants. So all the participants are quite attentive to presentations, but do not have any questions.
자, 식사 시간 이후라서 좀
So now we are going to take a 10-minute break and continue with the presentation session. So please be back after 10 minutes.
네, 이제 곧 네 번째 세션이 시작됩니다. 여러분 착석.
We will begin the fourth session soon. I'd like to ask all the participants to take your seats. So we're going to listen to the seventh presentation. So please kindly take your seats.
Please enter the hall as we begin the next presentation. Thank you. 네, 거듭 안내 말씀드립니다. 이제 다음 발
Once again, ladies and gentlemen, we'll shortly begin the next presentation. So please do come in and be seated.
네. 자, 이제 네 번.
So we're now going to begin session number 4. I hope you've enjoyed your break. And we are going to be talking about next generation of EPT. We are going to be sharing ideas of next ETP products. And Adam Z, this is VP and head of the digital asset product of the Global X ETF, is going to talk to us about the current state of digital asset market and issues related to ETPs. And so he's going to talk to us about cryptocurrency and digital assets, which are garnering a lot of attention. Well, we do not have relevant ETP products in Korea, but globally those products have already been listed. So I believe that this is going to be a session for you to be able to gain a lot of information. And our speaker is connected via online.
안녕하세요, 여러분.
Good afternoon, ladies and gentlemen. My name is Adam. It's a pleasure to meet you.
Thank you for inviting me to this event to discuss the current state of digital asset markets and the issues relating to ETPs. So, as of October 30th, the cryptocurrency market capitalization is approximately $1 trillion. Now, over the last 1 year period, markets have experienced a 70% drawdown from peak to trough. Now, there are no shortages of factors that cause this volatility, but the macro environment is likely the leading cause or detractor to the current state of digital assets. Now, the US is facing the highest level of inflation in 40 years. We're seeing a slowing in global economic growth expectations and a reduction in central bank liquidity, all of which remain key economic considerations. Additionally, it's expected that the market volatility will remain elevated through the current interest rate hiking cycle. So, with this market backdrop, investors, particularly retail investors, have cycled out of risk assets, which include cryptocurrencies and growth stocks. In our view, despite these headwinds, we're still bullish on digital assets over the long term, especially as a component of a diversified portfolio. Now, there's a saying amongst the crypto community that bear markets are a time for building. And this bear market, in our opinion, feels different than the prior ones. 2022 was a year filled with several headline events and developments, including the introduction of digital asset regulatory frameworks in the US and Europe, continued development and collaboration among traditional companies and crypto and Web3 protocols, institutional adoption of crypto from both financial and non-financial corporations, and to date, the largest and the most important technological update to the Ethereum blockchain, known as the merge. So despite the pullback we've experienced and the collapse of some high-profile projects, the overall digital asset ecosystem is healthier compared to 2014 and 2018, as there are greater levels of institutional adoption and investment in the space. The deleveraging that occurred during the summer, though painful, might have been helpful to flush out many of these risky companies and projects were unlikely to survive in the long term. Now, I almost view this period in digital assets similar to the dot-com bubble burst, which led to the NASDAQ index losing approximately 80% of its value. Both Bitcoin and Ethereum, the two bellwether crypto assets, have declined over 70% from their all-time highs in November of 2021. But let us ask ourselves this question. What are the tech companies that thrived after the dot-com bubble burst? There are many companies that we likely use often, such as Amazon, eBay, and Priceline. So my point is that crypto companies and projects that are battle-tested during this period may likely thrive when the cycle reverts. Now, as mentioned, the merge or the upgrade to the Ethereum network represents one of the most important milestones in the history of digital assets and a huge step forward in our view towards greater mainstream adoption. The core features are less energy consumption, better economic attributes, and better network security. The significant improvement in Ethereum's carbon footprint by transitioning from proof of work to proof of stake may potentially remove barriers for ESG conscious investors. Additionally, Ethereum has the most robust developer network and is currently the backbone of many high-profile Web3 projects. Now, there's still a fair amount of time before we see critical upgrades, such as increased scalability, but the merge was an important step forward. And lastly, the ability to generate staking rewards makes Ethereum a potentially attractive investment opportunity. The current nominal staking yields are approximately 4 to 8%, and given the supply growth of Ethereum now at less than 0.5%, the real yield is quite attractive. And in my nearly 2 decades of working in traditional finance and now in crypto, investors always have a desire for yield, especially from a diversified source relative to their equities and fixed income holdings. Now, the digital asset ecosystem is a nascent industry, but gaining momentum. However, it's important to keep in mind that we're still in the early innovator stage of adoption relative to other industries such as fintech and cloud computing. And to cross that chasm from early innovator to early adopter phase, we believe that education is critical. And in a recent survey we at GlobalX conducted, 80% of respondents stated that they had little to no knowledge of blockchain technology or digital assets. Also, a recent Pew Research survey found that only 16% of US adults have ever invested in or traded digital assets. However, those investors that do have knowledge of digital assets, 70% of those surveyed felt comfortable allocating a portion of their portfolio to digital assets. And despite this recent pullback, 40% of surveyed respondents indicated that they have either invested in digital assets for the first time or are going to increase their exposure. And from my experience in working with financial advisors and investors, education is paramount. Making sure advisors and their clients understand the risks and benefits of any asset class, not just digital assets, is critical for crossing that chasm from that early innovator stage to that early adopter phase to adoption. While we've experienced heightened levels of volatility, there's still a growing level of conviction, particularly among institutional investors for digital assets. Now, historically, market adoption is usually led by early innovators and retail investors, but it's now garnering significant interest and inflows from institutional funds and large corporations, due in part to customer demand and its attributes as a portfolio diversifier. Now, as mentioned earlier, this bear market feels different than the previous ones, as there are more well-established institutional players building and investing within the space despite the market volatility. It's also encouraging to see that an amount of venture investing is not slowing down as well. Now, for example, A16Z, one of the most influential and prominent venture capital funds in the world, has raised approximately $8 billion for investment in the space. Also, some of the top publicly traded companies like Alphabet, Goldman Sachs, and Microsoft have invested hundreds of millions, in some cases, billions of dollars into blockchain and crypto companies. Samsung and LG, two of the largest Korean companies, have invested over $1 billion combined in the space, particularly in metaverse and Web3 companies like Animoca Brands, Yuga Labs, and The Sandbox. Now, in addition to this venture investing within the space, some interesting stories and developments that I'm personally keeping my eye on include the first is the traditional financial institutions developing within the crypto space. Now, in September, I should say, the world's largest asset manager partnered with Coinbase to allow institutions to purchase Bitcoin via their portfolio management software. Bank of New York Mellon, the oldest US bank, is now providing custody services for Bitcoin and Ethereum. And NASDAQ, a traditional stock exchange, is also launching their own crypto custody services as well. Secondly, partnerships between traditional and mainstream companies and Web3 and crypto companies. A few recent examples that I found interesting is that Starbucks is using the Polygon blockchain to build their NFT loyalty rewards program. Universal Studios, a theme park, partnering with MoonPay, which is a crypto infrastructure company for holiday-themed NFT scavenger hunts, where participants find and scan QR codes hidden throughout the park to unlock digital collectibles, which grants them access to exclusive rewards. And lastly, one of the interesting stories that I'm also keeping my eye on is the tokenization of assets, especially illiquid assets. Now, Boston Consulting Group recently wrote a research paper in which they estimate that the total size of tokenized illiquid assets, assets such as real estate, private debt, fine art, private equity, etc., could reach $16 trillion by 2030. And we recently saw this with KKR, one of the world's largest private equity firms, tokenizing one of their private equity funds on the Avalanche blockchain. So the key point is that there's a tremendous amount of development and investment in the crypto space, and this is only the beginning. Now, the current regulatory environment for digital assets can best be described as fragmented. For the most part, digital assets are legal and available to buy and sell in highly developed countries and regions on popular exchanges such as Coinbase, Binance, FTX, and Kraken. However, investors are faced with the issue of self-custody. Now, self-custody is the act of holding your digital asset coins and tokens offline in a cold storage wallet. This is a best practice when it comes to investing directly in digital assets, as leaving them on exchange or on a hot wallet online exposes your holdings to theft and other cybersecurity issues. Now, the challenge is that investors need to keep their private keys to their cold storage wallet offline as well. And these private keys are a 12 to 14-word password, and investors typically write them down on a piece of paper or some other method. And if one were to lose their private keys, their holdings could also be lost forever as well. So the key point is that by purchasing digital assets through investment vehicles like an exchange-traded product, investors have a simple and secure way to gain access without the need to self-custody. Now, currently, the European Union, Canada, Brazil, and Australia have clear regulation on physically backed or spot crypto asset ETPs. In fact, the EU Council recently approved language in a proposal for crypto asset regulation known as Markets in Crypto Assets, or MiCA. And MiCA is a framework that seeks to harmonize regulation for issuers and service providers of crypto assets in the European Union. Approval of MiCA would be a major milestone and a big step forward for mass adoption of digital assets. Now in the US, there's still no spot Bitcoin ETFs approved as of yet, and it looks like there may be some time before there are approved. Currently, US investors only have access to Bitcoin futures ETF, and there have been a few regulatory frameworks proposed by the Biden administration, as well as members of Congress, but it remains to be seen how these frameworks make their way through Congress. Lastly, in Asia, the investor appetite remains strong. However, no spot crypto asset ETPs are broadly available to retail investors. While certain countries and regions are still grappling with establishing a regulatory framework for investable spot crypto products, prospective investors can gain access to the underlying technology that powers digital assets. Now, there are many technologies that are coined as disruptive, but only a few can be considered transformational. Blockchain could be one of these technologies because it has the potential to help reimagine our economic, legal, and political systems. Now, it's challenging enough to choose potential winners and losers in the traditional market, let alone in an emerging space like digital assets. We believe that broad and diversified exposure to digital assets and the ecosystem via index-based strategies may be the more sensible approach to getting access to the space. At GlobalX, we have two crypto equity ETFs, the GlobalX Blockchain ETF, ticker BKCH, and the GlobalX Blockchain and Bitcoin Strategies ETF, ticker BITS. Additionally, we have two spot crypto ETPs on Bitcoin and Ethereum listed in the European market. And these products provide investors with a simple and secure method to gain exposure to well-established crypto assets, as well as the blockchain ecosystem. Now, as mentioned earlier, digital assets are garnering increased interest from investors due to their potential ability to act as a portfolio diversifier. In volatile market environments, correlations across all assets typically go to 1 in the short term. However, longer term, as risk subsides, correlation amongst assets usually decouple. Now, what we can see from the table on the slide is that digital assets, as represented by Bitcoin, have a low correlation to the major asset classes over the long term. Thus, an allocation to digital assets may improve the diversification benefits and risk-adjusted performance of an overall portfolio. Now, while many investors may be reluctant to invest in cryptocurrencies directly, a growing industry of publicly traded companies that are contributing to the development of the blockchain technology and digital assets provide an alternative method to gain exposure to the space. This picks and shovels approach involves investing in companies such as digital asset miners, digital asset exchanges, and transaction service providers, hosting services, as well as equipment manufacturers. And the GlobalX Blockchain ETF provides this efficient access to these companies positioned to benefit from this increased adoption in blockchain technology, including companies in the digital asset mining, transaction, application space, as well as digital asset integration. And these companies have the potential to disrupt several areas of the economy, from payments and banking to supply chain management, legal, real estate, and more. And we view this ETF as that picks and shovels approach to gaining access to the digital asset space. Now, BKCH was launched back in July of 2021 and has a management fee of 50 basis points. The fund's current AUM stands at $71 million. The GlobalX Blockchain and Bitcoin Strategy ETF is an actively managed strategy aiming to provide more holistic approach to broad blockchain and digital assets theme by balancing the investments across Bitcoin futures and blockchain technology stocks. Now, this fund was launched back in November of 2021 and has a management fee of 65 basis points. For European investors that are seeking to gain direct exposure to Bitcoin and or Ethereum, we have two physically backed spot crypto ETPs available. Both ETPs are listed on the Deutsche Börse Xetra exchange in Germany, as well as the SIX exchange in Switzerland. And the benefit of purchasing these ETPs is that it is a simple and secure approach to gaining exposure to these crypto assets without the requirement to self-custody. And both ETPs have a management fee of 65 basis points. Now, as we head into 2023, Global X has ambitious plans to become the global leader in digital asset investment space. Now, we have offices in major regions that are, for the most part, crypto-friendly, such as Europe, Brazil, Australia, and the US. Additionally, we have support in the Asian market with team members covering Korea, Japan, and Southeast Asia. We have a robust product development pipeline that includes multi-coin strategies, thematic and sector-based strategies, and income-oriented strategies. So we're excited to continue to expand our product range and build our brand globally. Now, ultimately, at Global X, we want to be educators in the space and take a more consultative approach when it comes to digital assets. As mentioned earlier, the survey we conducted in August of this year, the vast majority of respondents said that they had little to no knowledge of blockchain technology or digital assets, yet 70% stated that they feel comfortable allocating a small portion to their portfolio in this asset class. So we've been focusing our efforts on developing educational and research content that the everyday investor can understand, as we believe that education is one of the most important leading contributors to greater adoption. So we encourage those that are interested in learning more about digital assets to visit our website, as we have several education and research pieces available. 감사합니다.
Well, thank you very much for the great presentation. 역시 Q&A 세션입니다. 질문 있으십니까?
So we now have a Q&A session. Any questions? If not, we will move on to the next presentation. Adam, thank you very much.
Thank you.
Hope to see you. 고맙습니다. 자, 이제
Now, let us move on to the next presentation. We will have discussions on the factors affecting the Korean ETF. And representing Samsung Asset Management, which is #1 ETF issuers, we have Mr. Choi Chang-kyu, head of ETF Consulting Division. So he's going to give us a talk on the ETF investment trend and some of the components of various ETF products. Good afternoon. I'm Choi Chang-kyu, head of ETF Consulting Division of Samsung Asset Management. I was in charge of the passive management of the ETF at a different company. Currently, I'm working as the head of the ETF Consulting Division, and we are in charge of product development, and we also provide consulting service as well to institutional investors. I was involved in the Codex ETF for several years, and we thought about how we are going to develop Mega ETF, and we believe that there are 11 success factors behind Korean ETF. If I'm given another opportunity to make a presentation next year or the year after, maybe I can talk about, for example, 20 or so factors that affect the popularity of ETF in Korea. I'd like to once again congratulate you on the 20th anniversary of Korean ETF. These are some of the flagship ETFs issued by different asset management companies. And this shows you the most popular ETFs by year from 2018 and 2022. The green represents leveraged and inverse ETFs, and the color yellow represents the ETFs that follow domestic Kospi index, and the pink color represents thematic ETFs. In 2018 and 2019, when we didn't have a big volatility in the market, we had leveraged and inverse ETFs actively traded, but we are seeing some switch to the thematic ETFs nowadays. And the table shows you flagship ETFs of different issuers. Now you understand that Korean ETF issuers have different characteristics. If you look at Samsung Asset Management, because we have Codex 200 as a flagship offering, we have Codex 200 based inverse and Codex 200 based futures and leveraged. And for Tiger, for Mir Asset Management, they offer global thematic ETFs. And for KB Star, they have flagship fixed income products. Now that we have 20 years of history of ETF products in Korea, I think we had a coming of age, and now different asset management companies have different characteristics when it comes to their offerings. So different ETF issuers these days, or some of them, have changed their brands. We used to have red capital letters in our brand at Samsung Asset Management, and we wanted to change the color to be more modern. So we have only the K in capital letter and other characters in small case, and we don't have the red color anymore. And Kindex is now changed to ACE ETF, and Smart of Shinhan is now changed to Seoul ETF, and KB Asset Management changed their brand from K Star ETF to KB Star ETF. Maybe this represents the coming of age of the Korean ETF, and maybe these asset management companies are struggling to offer mega ETFs to the Korean and overseas investors. Now I'd like to talk about some of the factors that affect the size of ETFs. But since I represent Samsung Asset Management, I'm going to talk about, but not only on Samsung offerings, but since I filtered the ETFs in terms of size and popularity, or the inflow or capital inflow, the majority of the case studies represented in my slides are from Samsung Asset Management and Mirae Asset Management, and I hope to introduce to you ETFs offered by other asset management companies next year or the year after. Probably one important factor is expense ratio. Of course, ETF is an investment vehicle that is highly efficient, so the expense ratio may impact the size of ETF and lower the expense ratio and better the ETF offerings. And that's what I learned from the textbook, so I want to understand whether this is really true. And if you look at the S&P 500 index, which is quite popular, I put together the expense ratio of different offerings, and Tiger S&P 500 has the lowest total fee at 0.07, and for KB Star S&P 500, their total fee is the lowest at 0.021. Then we could assume that lower the expense ratio, the size of the ETF will be bigger, and if the expense ratio is high and the size of the ETF is small. And the fee does not tell the size of the ETF. If the underlying asset is the same, if the fee is lower, that does not mean the size of the ETF is bigger. So we wanted to look at actual data, and so we look at the actual active ETFs, and we choose the active ETF because the active ETF tend to have higher expense ratio. So if higher the fee, probably the smaller the ETFs, and if the fee is lower, maybe the size of the active ETF is big. But it was not always true. So what I can say about expense ratio is that, as was briefly mentioned, lower fee does not necessarily mean that the size of the ETF is big, and even if the fee is a lot higher for the active equity ETF, the size of it can be relatively bigger. Now, what if we lower the expense ratio? Does that induce more retail investors? And if we lower the fee, do we also attract more institutional investors? Recently, there was a case that we lowered the fee. So FTSE China A50 and CSI 300, China H and China Hang Seng Tech all reduced their fees. But as you see in the table, with the lower fee, still we had more investment from the investors, especially retail investors, and size of the ETFs actually became smaller. But if the fee is low, the revenue of the AMC will be reduced as well. And if the AMCs can withstand such revenue reduction, they can still go for a lower fee. So we do not see a significant correlation between the fee reduction and the level of capital inflow. So maybe you want to simulate the relationship between the fee and the capital investment from retail investors and institutional investors. Sometimes you have to understand the fee reduction is not the most important factor to induce investment. In my previous work, I was an analyst in charge of derivatives, and because we have many investors making investments in derivative products, you may wonder that Codex leveraged and Codex inverse ETFs are popular, and if you offer such derivative products, maybe it will be useful to increase the size of your ETF. Recently, there was a Philadelphia semiconductor leveraged ETF recently launched, so I'd like to use that case to see whether this holds true. And there was a limitation of having the derivative products. Of course, the semiconductor company's stock prices recently fell, and maybe it was partly impacted by the market situation. But having leveraged ETFs does not really help the growth of ETFs or the size of the other ETFs. So maybe this is one consideration that you would like to make, whether you want to have the derivatives. For example, leveraged ETFs, we only looked at the leveraged products, and if we have positive leveraged and negative leveraged ETFs altogether, maybe it will be conducive to creating positive synergy effect. Now let us look at another factor. When I studied, I learned the popularity of the ETFs is associated with the size of the ETFs. At the same time, the disparity ratio has to be low, because if the disparity rate is high, it sometimes translates into higher investment loss. So I looked at also the disparity ratio. This is the disparity between closing price and net asset value. I'm using the cost 100 index 100 because until recently, Shinragen was included in the index, but recently it was delisted. So in ETF, we could not exclude Shinragen because there were no tradings. So that's why Costa 150 tend to have negative disparity rate. And if you look at other ETFs, the disparity ratio was close to -1. But if you look at Tiger China electric vehicle, the disparity rate is quite big. So I was really suspicious, because when I studied, the disparity ratio had to be low to make an ETF a quality one. But for international ETF and leveraged inverse ETFs are now popular, it is inevitable that we tend to have now higher disparity ratio. So it shouldn't be too low or too high, But still, we cannot just say that low disparity rate is always a good thing. Now, performance is another influencing factor. And some believe that good performance leads to a larger size of the ETF, and better performance means that better profits. And I'd like to show you once again the ETF AUM graph by performance-linked current price. As you see, there are good performance ETFs, and some of those good performing ETFs are of good size. But if you look at the Codex K Metaverse Active ETF, usually in Korea, the ETFs are listed at the unit of 10,000 Korean won. So if it's 7,000 Korean won, that is negative 30%. If you look at Codex K Metaverse Active ETF, the price is around 7,000 Korean won, so it is down by 30%, but the size of it is quite significant. Maybe there were some errors in my analysis, but you don't have to look at the current performance. Maybe you have to look at the peak performance to estimate the size of the ETF. But if you look at this diagram, performance does not always tell the size of the ETFs. I will give you another explanation regarding this diagram later in my presentation. There was a presentation made by a representative from Global X, and in Korea, we have Korean ETFs that are based on US underlying assets. So if an ETF is popular in the US, if that is based on the US underlying assets, some believe that that ETF will be also popular if it's launched in Korea. And you see there are some ETFs listed in the US and listed in Hong Kong. And as you can see, for China electric vehicle and Philadelphia semiconductor, the assumption holds true. It was popular in the US and it was popular in Hong Kong. It was also popular in Korea. But for iClean and for QClean, if it's related to clean energy, they're quite doing well in the US, but it doesn't have strong appeal to the Korean investors. And their performance was quite good. So if a product was successful in the US and in Hong Kong, if it's also launched in Korea, maybe it is likely to be successful in Korea as well. But if the theme is not popular in Korea, like clean energy and ESG, the popularity in the US or Hong Kong does not guarantee the success of the product in Korea. And looking at another factor, I wanted to talk about this factor before. And I talked about the change of ETF brands. And maybe in Korea, maybe the brand power has significant implications for the popularity of certain offerings. Codex accounts for 42% of market share, and Tiger has 37.9% of the market. And the right side figure shows the co-listing market share. And if you look at Tiger, Codex, KB Star, and ACE, they all had the ETF China Hansen Tech listed at the same time. And also China Star 50 was listed at the same time by Tiger, Codex, SOA, and ACE. And if you look at Tiger and Codex, with big market share, for joint listing, the size of ETFs got bigger. Maybe larger AUMs with big brand power, if they list the same product together, it has significant influence in the popularity of the ETF. And another factor that I would like to talk about is the first to market. If you're coming from the index providers, the ETFs that were launched for the first time in our market. Of course, there are also cases where the product was listed at the same time, which is a dual listing. If you look at Codex Europe Carbon, that means it's related to European carbon credit and global carbon credit. And there is also Metaverse, and there is another which is KU Infra, and there is also a nuclear power theme. If you look at these ETFs, there were first to market ETFs. And in Korea, of course, you have to have a strong brand power. And if your product is launched for the first time in Korea, that leads to bigger size of the product. So maybe next year, maybe there will be a lot of issuers who want to launch first to market products. So excluding Tiger and Codex, of course, we want to launch products that are launched for the first time in Korea, but I hope that other asset management companies will offer products that are new to the market. I talked about performance before, and I wanted to add something about that. For Korean retail investors, they always look for continuous performance growth, but it is not true actually. If you look at the Tiger US Tech Top 10, and if you look at Tiger US Philadelphia Semiconductor Sector Nasdaq, the orange represents the price or the performance. If you look at the price, we don't see a clear upward trend. Sometimes it goes up, it's adjusted, and then it goes down, and then it goes up again. But if you look at the blue bars, there is a continuous upward trend. Of course, maybe some couldn't sell their holdings, but for Korean investors, they tend to make investments on the products that are based on highly volatile underlying assets. So they always look for a certain level of volatility in the underlying assets. There are two more factors that I would like to cover. Another one is the viral or the word of mouth. So if there are more people talking about it, the offerings will be more popular. If you look at the green graphs, that's based on the search volume of Naver. Though there is a correlation between search in Naver and the individual net purchase amount, maybe next year, viral marketing will be actively deployed, and there are many in this audience who recognize my face, and sometimes I'm featured on YouTube channels. Now I'd like to talk about the initial trading volume. For me, for TDFs and ETFs, there are a total of 10 TDF ETFs launched from 3 issuers. After having a certain amount of initial trading volume, those ETFs continue to attract continuous flow of investment. So it is important to secure a sizable initial trading volume. If you're from issuers, maybe you want to have strong advertisements or strong promotional campaigns in order to secure higher initial trading amount and volume so that you can continue to grow the size of your offerings. To summarize my talk, in Korea, if you want to improve the size of the ETF, you have to have a strong brain power, you have to have the first to market products, and you have to have a big initial trading volume, and you need to invest in promoting your products. And if you're coming overseas, probably you will find these factors quite interesting and important for the Korean market. Thank you very much for your presentation, Mr. Chen, and you also nicely summarized your talk at the end. Do you have any questions? We'll take questions from the floor, but I see none. So with that, we'll move on to the next session. So, Mr. Chan talked about some of the factors that affect the popularity of ETFs in Korea. Maybe foreign participants may find the factors quite interesting. So thank you very much for your presentation, Mr. Che. So the first to market concept, the initial market trading volume, and the brand power are very important in Korea. So once again, thank you very much for your participation in this year's conference. So we listened to 8 presentations so far. Now let us move on to the panel discussion session.
20주년을
So we are now celebrating 20 years of ETF market here in Korea, and I see that our attendees have not left us, and we still have many people joining us online, and they have left us with many questions and comments. Thank you very much for your interest. We're now going to begin the panel discussion with the title of Diversified ETP, What Does the Future Hold? We have invited asset managers and index providers to join us for this panel discussion. And as the moderator of panel discussion, we have invited Dr. Hyo-Sup Lee, the head of Financial Services Industry Department of Korea Capital Market Institute. We have Chung Seok-keum, director of KB Asset Management, Charlene Loh, head of Strategic Partnership of ETPconfерence, and Winnie Carroll, the head of Market Structure for the ETF and Index Investing of BlackRock, and Mr. Mark Hackert of the Chief Officer of ICE are going to join us for a panel discussion. So, Mr. Hyo-Sup Lee, I would like you to lead the discussion. Good afternoon. I would like to thank the KRX for inviting me to serve as the moderator. And I think we need to have a round of introductions first. And most of the audience are Korean, and since we do provide simultaneous interpretation, and so I will be speaking in Korean. And let me, Mr. Keum Jung-sam, would you introduce yourself? Good afternoon. My name is Chung Seok-keum, and I'm responsible for the ETF product and its marketing at KB Asset Management.
Hello, I am Mark Hackert. I'm the Chief Product Officer for Fixed Income and Data Services at ICE.
Via Zoom, we have 2 panelists joining us. Would you introduce yourselves, please? From iShares, would you like to go first?
Sure, I can go first. Hi, my name is Winnie. I am head of market structure for iShares ETF Index Investing, based in Hong Kong at BlackRock.
And so, our last panelist, would you like to introduce yourself?
안녕하세요. My name is Charlene Loh, and I head up the exchange-traded product business for Contigo here in APAC. And good afternoon to all of you. It is an honor to be here today and also to exchange ideas and learnings with all of you.
그러면은 이제 본격적으로.
So, we'll now begin the discussion. And as I was listening to the presenters, they were saying that the ETP market is growing very quickly globally, and the Korean ETP market has also grown very quickly. And there was a presentation about the new ETF and ETP products, and the crypto and the thematic, active, and TDF. And so it seems that there are a lot of interest for many different types of ETP products. So so can you talk to us about your new ETF or ETP product that you have recently released or that you're planning to list? My name is Chung Seok-keum of KB Asset Management. we have a brand called KB Star for our ETF products. We have about 94 products with AUM of 5.5 trillion AUM. And we are in the process of increasing our net value. And after the COVID, about 32 new products have been listed, and our AUM has increased by about 2.5 trillion won. And so in the past 2-3 years, we have grown very quickly. So we are one of the asset managers that has grown quite fast in Korea. We have begun with the ETF business back in 2009, and KB Star are mostly our fixed income ETF products. And as Mr. Che has said that, well, we are latecomer when it comes to equity ETP products. And so we are pitching products with low expense ratio. And as for the thematic product, we are focusing on ESG products or eco-friendly ETFs. And so we are listing products in those categories. So we have listed many new products recently. And so by the end of the year, we'll have about 100 different ETP products listed by us or provided by us. And in November, we are going to have a secondary battery recycling battery. It's going to be actually listed next month. So we are going to continue to release such products. And as for we also have a maturity related fixed income ETFs, and we are going to have a larger such product than our peers. And there's also need for monthly dividend products. In other countries, about 80% of the monthly dividend products are fixed income products, because the fixed income provides steady or cash or income stream. In case of the U.S., about 80%, about 90% of the product provide monthly dividend. And our new product, we'll have 2 products of such, and they will be the first monthly dividend such product here in Korea. And so we're going to have product with high YTM, and the interest rate right now is quite high in Korea. So we are going to be listing the monthly dividend fixed income products mostly coming in the future.
We'd like to now turn to Mark Heckert from ICE.
Thank you. At ICE, we're involved at the ETP ecosystem in a number of different ways. First of all, we own and operate the New York Stock Exchange, which of course is an important venue for exchange-traded products. Second of all, we operate the ICE futures exchanges, whose futures contracts are used in a number of different commodity ETNs and other products. And lastly, the business I represent, the data business, is heavily involved in providing data, but very importantly, indices to the ETP marketplace. Within our index lineup, we've long had a stronghold in a couple of different areas. First of all, within the fixed income area has been an area of stress and emphasis for us for a number of years since our acquisition of the Bank of America Merrill Lynch Index Series. We've also had a strong thematic equity business for a number of years as well. And we see this as a greater opportunity for us to continue to invest in thematic equity indices. Across both of these platforms, we see a tremendous interest from our client base in sustainable finance trends, both in Asia-Pac but also globally. So this is an area of investment for us. Beyond this area as well, beyond the thematic equities, we really see a broad-based equity index series as something our clientele could put to work. And we think that some of our additional data that we can layer on top of that will be advantageous to our client base. When I look at sustainable finance, for example, we're investing heavily in geospatial capabilities to really understand the geospatial impacts of social and climate change on data and on real assets, and therefore how we can create indices that better serve our investors' interest in this marketplace.
예, 감사합니다.
Thank you very much.
저는 블랙락의
So, Winnie Qatar from BlackRock, would you like to make your comment, please?
Thank you very much. Yes, thank you very much for having me here. I'd like to take a step back, and you mentioned in the beginning that ETP market has seen a big growth, and there are different types and varieties of ETFs that are available. I want to set the stage as to why diversified ETFs are actually important. We foresee that the ETF assets are likely to cross $12 trillion by the end of next year, 2023. Now, along with innovation and access, which is evolving quickly for ETF markets and core to ETF market, there are also two key traits of the next generation of investors, which we think is likely to drive this growth. First one, ETF investors are active investors. And second, investors are sensitive to cost, increasingly so. If we forget the active versus passive debate for a minute, all investment decisions, in our opinion, are actually active ones. As investors recognize that asset allocation tends to be more important than individual security selection, they're likely to step up their use of ETFs as building blocks in asset allocation, and B, they're going to look for vehicles that deliver factor-based or thematic or alternate exposures to maximize their return. This is where we think diversified ETFs come in very handy. We at BlackRock, as fiduciary to our clients, seek to capture long-term megatrends, as opposed to trendy one-off themes which may seem like short-term betting. Two key components to our design strategy, our ETF design strategy, are diversification and liquidity. In year 2022, this year alone, we have launched 9 thematic ETFs globally, and while coming from a small base, we've seen 5 times increase in our flows into mixed asset ETFs listed in the US. So we definitely foresee that this is a theme which will continue to trend, and we'll talk more about it as the discussion evolves around what are the top themes that we see, where we see most interest in the rest of the discussion. But definitely this is an area where we continue to focus our energy and efforts into, where we foresee growth in the coming years. Thank you.
예, 좋은 말씀.
Thank you very much for your comment. We'll now turn to Charlene Lau from Contigo. So please kindly introduce some of the new offerings from Contigo.
Sure. Actually, picking up from what Winnie has shared, if you look at traditionally the way investors have diversified is through markets, whether is it developed markets or emerging markets, through asset classes. The classic one is equities and fixed income. But we've seen and we've learned that if the event like pandemic have affected us all. So at Contigo, what we're really bullish on ETPs are products that can benefit from long-term structural trends that is actually transforming our economies and transforming our societies. If you look at the way we consume and you look at the way we invest, it has actually changed in a post-pandemic world and changed in a currently very geopolitical challenge world. So we know that inflation is here to stay for some time. Energy prices will continue to rise, even with all the transition to renewables, for example. The initial investment will be high, so prices will remain high in the short term. And we continue to face supply chain challenges, right? Initially from the virus, but then now from geopolitical tensions. So what do? Where we have seen 3 very strong pillars in this, and where our company have done well, is in 3 lenses. So we provide a view for investors to see the world through a sustainability point of view, through a thematic point of view, and even through a European point of view. And I'll share with you a little bit more details from there as we converse on.
예, 감사합니다.
Yes, thank you. So it seems that Mr. Koom said that his company focused on fixed income products. Now they were focused on the thematic products and then income products. And from ICE, we have heard that the index development and data management, and that is to do the analysis of the data to have more customized indices for the customers. And BlackRock has told us why ETF is important, and she has said that the importance of expenses and about portfolio diversification capability of ETF. And Charlene has said that in this era of post-COVID, with the paradigm has changed. So he said that her company is looking at sustainable thematic ETFs.
So there were some changes in ETF offerings, as was mentioned by some speakers. For the past several years, thematic ETF, derivatives, and active ETFs are quite popular, in particularly in Korea, with high inflation and with the geopolitical risk. What kind of ETFs will be popular going forward? For example, maybe what's your thought on the crypto ETF? Now that we will have high inflation and high interest rates, maybe income ETF will be a big thing. Maybe active ETFs need new strategy. So will be some of your comments on the future of ETFs for the next 5 to 10 years.
예, 순서대로 예.
네. 사회
Just as the moderator had said that, because of increased economic uncertainties, we do not expect to see the growth that we saw in the ETP market that we did in the past. So we will have to think and there will be some products to deal with the economic uncertainties. So there could be products related to quality. So those type of products will be listed. And so the products with now, a low valuation. So the value equities it's more of the treasury bond-based products, I think it will become the popular products. And in the next 5 years, the product that we need to pay attention to would be income-based ETF products. And there will be many of these products. And in the pension. So after people have retired and before they received the pension from the National Pension Services, there will be 10 years gap. And so the Korean investors have to generate income somewhere between that 10 years. So they have to have a product where they can get cash for that 10 years. So there will be some products that can help to fill the gap between retirement and before receiving the national pension. And so we will going to try to come up with such products. But however, our product will be with 1 year or 3 year. But in the future, we may come up with 10 years that is going to help us to fill the gap. And so not just the domestic fixed income products, but also international fixed income products. And also, covered call product, so that to generate two-digit income products will be tried in there's a buffer ETF or the option call option products. Well, those products with premiums are tried in other countries, and I'm sure that those types of products will also be tried by Korean asset managers. And as was mentioned by other speakers, the thematic ETF, they have been popular in the past and will continue to be popular in the future. And thematic ETFs will replace the sector ETFs. And thematic ETFs will be able to deal with the rigidity of the different themes. And so we will have new thematic products in line with new trends or the new themes. And as for the active ETFs,
Well, I believe that here in Korea, we'll continue to see more active ETFs. In the United States, between active and passive, I understand about 60% of new products are active. That's because it's more efficient in terms of operation with the management. And so here in Korea, we may not have the institutions, but as the other countries, but we do see more active ETFs going forward. So under such uncertain circumstances, we will have more dividend product, income product, quality product. And when I say income products, it's going to be multi-asset products that have both equity and fixed income. So we will see these new attempts going forward. Thank you.
So the value stocks and the dividend stocks and income ETFs will continue to be popular because of the high inflation and high interest. So stability-based ETFs will be important. So I would like to turn to Heckert. So for the next 5 to 10 years will be the popular ETF. And from the perspective of index providers and issuers, how do you see the crypto ETF or the crypto industry, and what's your thought on leveraged ETF? Or do you have any other types of offerings that you are interested in?
Thank you. I'll touch both upon the retail market as well as the institutional market. Within the retail market, as I mentioned previously, we had seen some trends towards thematic ETFs particularly around technology, whether it was electric vehicles or semiconductors, for example. We continue to see the retail investor have increasing appetite for different investment types, including, as I mentioned earlier, sustainable finance. So we see the retail investor looking at sustainable finance. At the same time, the marketplace is encouraging investment in fixed income, with our change in rates and our change in inflation. So we're talking to asset managers increasingly about how to create fixed income products that have a sustainable finance tilt to them. I think topics like impact investing, but going beyond just a green bond, but to deeper understanding of whether that fixed income investment actually has an impact on communities or on climate change. That's the kind of investment that retail investors are telling our asset manager clients they would like to see. If we look at the institutional side, one trend we're noting quite heavily is the equitization of fixed income, meaning taking some of the thorny challenges of investing in fixed income, wrapping those in exchange-traded product, and making that product more accessible to different participants in the marketplace. So, for example, a couple of years ago, the U.S. insurance industry, due to its regulators, the NAIC, was able to make changes that investing in a fixed income ETF was equivalent from a capital perspective as investing in the actual fixed income. This has made the investing job of the insurers that much more efficient. They have a more efficient product, a tighter bid-ask spread in which to invest and participate in the markets, and have the same capital treatment as if they were investing indirectly in the fixed income securities. So this is really important for the insurance industry. We see our asset manager clients increasingly looking for other opportunities for equitization of fixed income. What are other inefficiencies with the fixed income market that have made that product harder for whether it's institutions or individuals to access, but in particular institutions? So for example, on a traditional asset manager, cash can be a drag on their performance. Investing in fixed income securities, like I said, has a large bid-ask spread, can take time to invest properly, whereas one can put one's investment into an ETF as a traditional asset manager very quickly, and therefore reduce the drag on performance from cash. This type of activity, whether insurance investors or asset managers, traditional asset managers, this is what our ETF active manager clients are looking for, is how do we make more and more fixed income product more appealing to this marketplace by equitizing it, by putting a fixed income or an ETF wrapper around that fixed income.
예, 감사합니다.
Yes, thank you.
So he talked about retail investors and institutional investors. And the institutional investors prefer technology-related products, and the retail investors seem to prefer green and sort of products. And also he said that because of the regulatory changes, there is going to be more need for fixed income products by the insurance companies. Now I'm going to ask Charlene.
What do you think will be some of the popular ETFs in the next 5 to 10 years, Charlene?
Sure. If you listen to today's conference, Two of the themes resonated a lot today. A lot of people are talking about thematics and sustainability. So let me share with you how we can segment thematics, right? How to look at it through a framework, because otherwise it's going to start getting really noisy. And if you look at thematics, I think there's 3 different buckets that you can define what thematic is. You can look at social demographic. That means more lifestyle, more behavior-driven themes. You can look at future technology, which a lot of the fellow panelists and speakers have touched on today. And the third one is on sustainability, which in a way you can also look at it through a thematic point of view. So it's not just ESG, but it's beyond that, beyond climate, beyond into impact investing. But I think what would be interesting as a future of ETP, when you look through that kind of lens, is they can all be combined. So for example, if let's say today we're all talking about inflation hedge properties, right? What do we look at? Earlier, I think FTSE Russell talked about entrepreneurial, looking at real estate, looking at infrastructure as a good inflation hedge. Or you hear from Bloomberg, they were talking about sustainable investments. But what if you can combine them? For example, you can look at infrastructure and you can combine them and unlock the synergy through, say, for example, the UN SDG. I think goal number 13 talks about sustainable cities. Or today we talk about climate investing as a theme, but you can also cross that and link it to, for example, UN SDG goal 13 on climate action. So don't think of thematic or sustainability as pure plays, but how you can combine them. And by combining them, you can unlock the complementary powers of these investments. So in the way we have been working with investors and clients, we realize that it's no longer just about constructing an index, it's really about understanding your investment theses. And therefore, what we have done is we have combined our 20 years of index and analytics experience to help them formulate a future worldview, and then from there balance the need for dividends, the need for liquidity, the need for growth, the need to manage risk, combine all these different things to build a portfolio that makes sense. And from there, it can then be translated to a product like ETP. So for example, if you look at just thematics, and if you don't know where to invest or where to go, one good example, if you look at, I think iShares recently just launched an ETF of thematic ETFs. So meaning their expertise was to shortlist all the big themes that's going to drive the future growth and put it all under one umbrella. I think it's under iTech. So it makes it so easy, because you as an investor, if you worry that you're not diversifying enough, then you can look at an ETF of ETF, for example. I think the other way of looking at what's successful is actually looking at a European or German theme. Many of you may not be familiar, but Contigo is owned by Deutsche Börse, the German stock exchange. But under that, we have brand names like stocks, Euro stocks, and DAX indices, as well as Axioma. But a lot of investors ask us, oh, now must be a really difficult time to invest in Europe or in German, right? And I like to tell them the story. I said, look, I think ladies will resonate. If today you walk past Louis Vuitton and you see a sign that says 30% sale, what will you do? You will go in and buy, right? You will say, oh, this is great, because LV products will hold its value. And maybe for men, it will be Mercedes-Benz or Porsche, But what is interesting that these are all blue chips companies, but they are actually in the Euro Stoxx 50 or in the DAX index. So we can talk about thematic, we can talk about sustainability, but also don't forget about fundamentals. It can right now probably, it could be a good time to pick up, solid blue chip companies at a great discount. So I think that's one way to look at what's in the future. So I think a good portfolio mix is one where you can combine all these different things, from thematics to sustainability to your core fundamentals, but combine it in a way that gives you a lot of synergy, that helps you to unlock and manage your risk and increase your returns and check your boxes of, achieving dividends if you want, or income if you want, right? So you have different investment goals. There are tools out there that can help you to combine this in a smart way, in the most effective way to help you. And ETP is one good vehicle that can help you to use this as core building blocks to build that portfolio.
예, 좋은 말씀 감사드립니다.
Thank you for your comment. It seems that she has a broader concept of thematics, thematics related to population, thematics related to technological innovation, also thematics related to sustainability. And she also said that in this time of inflation, the sustainable theme and income theme could be converged. So like property and infrastructure could be added with sustainability themes in order to produce persistent income. Now we're going to invite Winnie to talk about the most promising ETF product in the next 5 to 10 years.
I think I'm going to expand a little bit on what Charlene just mentioned because, we fully align with that view as well. Obviously, thematics is something that's been discussed a number of times through this discussion and through the conference as well today. What we've done is in line with our strategy, our global strategy to maximize long-term returns for our shareholders, we have identified 5 megatrends. This is technology, demographic change, climate and resource scarcity, urbanization, and emerging global wealth. These, we believe, are structural trends that are going to change the way we live. And companies that operate in these areas and are related to these 5 mega trends are likely to benefit from the tectonic shift that is about to come and are best positioned to outperform the markets in the long run. So what we're seeing already is clients that are using our global range of thematic ETFs are already, benefiting and that exposure and uptake is increasing quite fast. Our global clean energy range, for example, the top 2 ETFs in the clean energy range have close to $10 billion in assets already, which is an evidence to that. In total, we have over 40 billion assets tracking these themes globally. What Charlene also mentioned around, if you don't know, if you don't want to pick one specific thematic exposures, we recently launched a product in Australia in partnership with Quantico, where we offer 6 different thematic exposures under a single ETF. Such diversified ETF exposures are affordable, they provide you a holistic investment option for investors, and you can easily build a very diversified portfolio in a single trade. Second thing that we think cannot be ignored is fixed income ETFs. We discussed, and my panelists from KB Asset Management spoke about it already, fixed income ETFs. We think both short-term and long-term income products are going to remain relevant in the coming decade. Transparency and access are 2 things that ETFs bring to the fixed income market. You can see through an ETF what is the underlying. You can see the price formation on the exchange. You can easily get out of the product and get into the product, right? Versus the underlying bond market, which is traditionally very OTC. When we look at Asia Pacific as a region, APAC markets offer the highest yields, which makes it very popular. But also what we've seen is US and European treasury ETFs, some of which we have cross-listed in Japan, are extremely popular and have gained a lot of assets among investors. So that's also one of the trends that we think is bound to continue in coming decades.
예, 감사합니다. 블랙락에서
Thank you. So maybe you're talking 5 megatrends, changes of the democratic and technological innovation, climate change, scarce resources, and geopolitics. And you offer ETPs quickly at lower cost for investors. That you will continue to do so. Income ETFs will be also launched possibly, and Asia is still a very attractive market. Since we have only 1 minute left, if any one of you has any comments that you'd like to provide for KRX or the Korean regulators, this is the chance you can do so. Any one of you? Any last comments that you have?
So I guess since we do need to talk to the Korean authorities, well, I guess I'm Korean, so I will take this up. Well,
the ETF market was able to grow when there was reforms in the market and there was a change in the taxing systems. So the leverage ETFs were introduced into the Korean market because the regulations changed. And related to taxes, in the next year there's going to be a financial product income tax that's going to be introduced. When that tax is introduced, then it's going to be to look at the profit and loss from the ETFs. And so the product that provides dividend in once a year, that sort of product will be qualified. But in case of the fixed income, typically TR-based fixed income ETFs, and if they do not pay out the dividend, if they do the reinvestment, then it's not going to be able to enjoy the benefit of the new regulation related to the taxes. So I think that we need to have more discussion about this here in Korea. And about the active ETF, well, the correlation has been lowered to 0.7. However, a non-transparent ETF or semi-transparent ETF, which are tried in the United States, are not available in Korea. And so so maybe we do need some sort of like semi-transparent ETFs that can help to increase the alpha. And if such things are allowed, I believe that there will be more diverse ETF products available in the Korean market.
So before we introduce the tax for financial investment, and because of total return products can have this merit, we need some considerations. And also we want to promote non-transparent ETFs, and we need to institutional support. Since our time is up, if there is any question from the participants, we'd like to take one or two questions from the floor. Any questions from participants? We spent our time already, so we'll have to wrap up our discussion session here. So thank you. Thank you very much for finishing the discussion session on time, Mr. Lee. So that was our session number 4, and we are going to have our last session. And the theme of the last session is efficient trading and liquidity. I would like to have you all for our last session. And now we will take a 10-minute break and be back by 3:20.
여러분, 어느덧 5번째 세션의 시간이 거의 다 되었습니다.
The last session will begin shortly. We'd like to ask all the participants to take the seat. The final session of Global ETP Conference Seoul will begin shortly. We have one presentation, and then we will have the final panel discussion session. So if you have any questions, please, this is your last chance to ask your questions. So once again, thank you very much for being with us until the end. And session number 5 will begin shortly. Please kindly proceed into a hall and take your seats.
네, 함께해 주신 여러분 고맙습니다. 이제 본 컨퍼런스의 마지막
Ladies and gentlemen, we're now going to begin the last session of today's conference. So this is session number 5. We are going to talk about efficient trading and liquidity. So we're going to be looking at global trend related to the efficient trading and liquidity. Mina Kim, Senior Director, Head of APAC Equity Index and Cryptocurrency Products at CME Group, is going to talk to us about ETP tools for changing market, the futurization of the OTC space. And many international ETP products are listed here in Korea, and I understand that many derivative products are used in order to provide liquidity here in Korea. So she's going to shed some light on that issue.
안녕하세요. Good afternoon. Today, and very much I'm honored to be here. And big congratulations to the KX for the 20th anniversary of the ETF. 안녕하세요. 저는 김미나라고 하고요. 일단은
My name is Mina Kim. Well, I got here yesterday morning, and upon arrival, I heard a very tragic news. So I would like to pay my condolences to those that have passed away. And I would also like to thank KRX for this opportunity to make the presentation, and congratulations on 20 years of ETP market. I don't know if you know about this. CME does not have ETF or the ETN products. We are the largest derivatives exchange in the world, but we do not have ETPs. Well, ETP is based on the liquidity. So ETFs and ETN, all these products require our support in the ecosystem as we provide the liquidity. So we do provide liquidity to these products, and so that you can design the product and list the products. And we also provide a liquidity to hedge those products once those products are listed on the exchanges. We have many institutional investors here today.
Our futures and option product are operated 24/7, so 24 hours a day. What you are most interested in, it would be the liquidity during the Asian operation time. I've been to many global conferences, and I have met with the institutional investors, and they have been telling me since last year and this year about 4 things, not just from the Korean institutional investors, but also other institutional investors. They have been talking about liquidity after the pandemic. And since the pandemic, people have been having a lot of questions about liquidity as well as volatility. So when it comes to volatility, of course, you need options. And so CME traded option products provide liquidity to the Asian market. So I'm going to talk about that. And then the second thing that the institutional investors are interested in is the UMR, which is uncleared margin rule, which is now being discussed in our community quite a lot. And so the exchanges as well as traded products are gaining some benefits due to UMR. So UMR related products, well, how much liquidity are they bringing about? So I'll talk about that. And then I will talk about ESGs. The exchanges want to provide more ESG products. And so we at the CME have the ESG product with excellent liquidity. And so we are building liquidity on that product. So I will talk about that. So let me first talk about the index options. And so when trading options related to volatility in the mid to long term, we have this question. So the ones that are traded in the OTC, how can you bring that into the exchange market? And people give us a lot of opinions, and we have put in a lot of effort to be able to allow that. For instance, you have to have all the functions that are available in the OTC to the exchanges. So there are those capabilities within the OTC market that we're trying to bring into the exchanges. And a curve, we have increased our most represented products there. And so we have a weekly, we say weekly, but we do have options that do mature every single day. And so if you have a product that you want to design, and the maturity structure can be decided by you anytime, because we allow that now. And also, if you have also made minor changes to our existing products. In case of NASDAQ, there's a lot of demand coming from Asia for the NASDAQ options. We made it possible to be traded in blocks. And also we have the Tuesday and Thursday option products. And through this sort of efforts, as you can see in the graph, in the year 2020, there was, because of the pandemic, there was the biggest volatility. The VIX index was highest at that time. But if you look at now, we now have more liquidity in 2022. So there is about 1 million to 1.1 million that is being traded. So this is 24 hours. So for you in Korea, you are most interested in the liquidity in the Asian time. So we are working very closely with the market makers. So for the non-US hours are from 7 to 10. This is the trading volume. You see it's growing very steadily. And also if you want to make a structured product when you're doing the hedging to ensure that there are no problems, we also are putting efforts to provide you with the off-block market products. And so for Korea, beginning early this year, the institutional investors have been utilizing our option market blocks very actively. And we have BTIC and TACO here that I want to introduce. They are not standalone products, but I wanted to introduce these products to you. And for asset management or for ETF, so asset managers and ETF issuers, since our launch of these products, have been very interested in those products. And so at the end of the month, end of the quarter, when they're doing the portfolio rebalancing, they need cash. They do trading at the cash index, close index. And so that is the idea that is incorporated into these products. And so for S&P 500 products, from open till close of cash, the spread can be traded on the screen, and it can be done by spot, it can be done by block, and from the Asian time till the U.S. spot end or close time, you will be supported by CME. This is a very useful means, and the ETF market makers utilizing BTIC product can net off the position at the close, and the ETF providers utilizing this product can trade the basis at cash close position. So the equity market close prices, well, those are very volatile, and so you do not have to pay attention to the U.S. market, which would be your night times, and so daily volume is about 5 million, and you said the S&P future is already 2 million or 5 million untraded, so you may see that this is not large, but if you look at the New York Stock Exchange or NASDAQ, if you look at the notional value or the NOC volume, well, this BTIC product is about on average 30%, and end of month, end of quarter, well, this number 30% increases to 60-70%, and so if you have exposure to the U.S. stock market, I believe that this is a product that can be very useful to you. And we have what's called TACO. It stands for Trade at Cash Index Open. So during the market, U.S. spot index, in the open time, you can trade the basis and the differences, and so you do the basis trade, then you get the futures position, and you can get the equity index price products, and so this is a product that's going to be very convenient for the asset managers, and this has been evolving. BTIC and TACO can only be provided for the given day, market open and market close. But we also have forward products for BTIC and TACO. And related to UMR, I'm going to be very brief about this. And many exchanges have products related to UMRs. And they are enjoying the tail end wind due to UMRs. So they come from the OTC, an uncleaned swap margin. And in phase 6, I think, was implemented last month. And so in most of the institutions has to deposit the initial margin, but exchange traded products is most cost effective when it comes to in this level, and so those products And there's the EFRP product and dividend futures, total returns of futures, and sector of futures. Well, they can be used as the underlying assets for the ETFs, and when the ETFs are listed, these products can be utilized for hedging purposes, and we provide liquidity for that purpose. And then there is the EFRP, which stands for Exchange for Related Position. So there are three different product, so within the FRP, and exchange for physical is what the asset managers are interested in. And so the ETF position and the futures can be exchanged bilaterally. So we provide the platform and that purpose. And also EFR, if you do option trading, OTC, and there's going to be delta leg, and that delta leg can be exchanged in our exchange with this product. And I have talked about many different products. Now I have a brochure that you can read about, and so I will not talk about that in details.
Because today I want to introduce to you the bigger picture. So there are these UMR related offerings for S&P 500 sector, select sector. So this is the yield today of 11 sector S&P 500. For energy, you see the profit yield is around 60% within the same S&P 500. If you look at the communication discretionary or technology or communication service and consumer discretionary, it's negative 30%. So you purchase the same basket and you follow the same index, and index choice matters. So depending on the index that you choose, the performance can vary. And this year and last year, with the higher market volatility, it is all the more important to understand that. So there's a sector division and there's higher volatility, and there are differences in terms of between indexes, and you can use the products that are traded during the day to respond to the volatility. I'd like to talk about ESG, and there's one more thing that I would like to talk about, but I'll touch upon ESG first. And maybe you already are familiar with ESG. COP26 was organized in November last year. Korea and Japan declared net zero by 2050. Of course, we have to overlay the ESG to Korean portfolio, but if you carry US stocks, there's a S&P 500 ESG index futures, and it was launched right before the pandemic. And of course, there was a demand from the buy side, but this is a Morningstar data, and if you look at it during the pandemic in 2020, when COVID-19 pandemic broke out, major funds saw the capital outflow. But if you look at the green bar, which is the sustainable funds, they continue to saw the inflow of capital. And regardless of the asset class, ESG is overlaid, always. Of course, in Nordic and European countries, they are quite aggressive in embracing the ESG concept, but in Asia, the mid and longer term, we will continue to see rise in demand, and therefore in your portfolio, when you overlay ESG, you will need different types of support. That's why we offer some ESG products. There is cash equitization, and of course, there are some, or there will be more ESG-oriented funds. And ESG mandated funds, when trading ESG related transactions, they'll be able to satisfy and fulfill their ESG mandates. And S&P 500 has daily trading of 2 million contracts, and you can of course use that structure But in S&P 500, we have a pretty strong and solid ESG methodology. If you look at the exclusion-based index, and you see this is a solid index, and it can be used to design our products, quite convenient. And if you meet Asian institutional investors, they are all interested in ESGs, but it doesn't really help their yield. Then I show them this diagram. This is Mother Index and ESG Index, S&P 500 and S&P 500 ESG performance. And if you look at the 10-year period, there's only 40 basis point difference. Of course, ESG outperforms S&P 500, but for the past 5 years, as you see here, if you look at the total return, S&P 500 is at 13.50 and S&P 500 ESG is 15%. So of course, the returns are the main factor for investing in S&P 500 or ESG, but you can have higher comfort level by having this guaranteed or higher return on investment. So this is what you want to understand when you want to make investments in ESG related fund. For futures, like other products, you see a huge growth. Daily volume may have some daily fluctuations, but open interest is very important for institutional investors, and open interest is growing at a significant level year by year, and record volume was 4 billion open interest, and currently we have open interest of $2 billion. I don't think I have much time, but today I gave you a high-level overview on 3 different trends. There is one more thing that I did not mention, which is crypto. At CME, we have Bitcoin, Ethereum products that are actively traded, and because of the Korean regulation, we haven't entered the Korean market, but there are active trading happening 24/7 with Ethereum and Bitcoin products. There are 8, 9, or 10 products that are traded on our exchange. And one thing that I would like to say is that next year, we plan to talk about some crypto-related opportunities. And this morning in Hong Kong, SFC made an announcement that for the first time in Asia, virtual asset futures ETF was approved, and they will receive applications from asset management companies. And the futures ETF is traditionally based on. Also, there was an announcement on the product eligibility, and CME will be the exchange that will offer the offerings. And so this VR conventional exchange that are recognized by the authority, and please also remember our eligibility for the offerings. So with that, I'll conclude my presentation. Thank you very much for your attention. So thank you very much. So are there any questions from the participants? Any questions from the floor? It was a really informative presentation. If there are no questions, thank you very much for your wonderful presentation.
9시 간단한 개회식을 시작을.
So we begin at 9 o'clock with opening ceremony. Now we've had 5 sessions and had 9 presentations. Now we only have 1 panel discussion left, and we have prepared a session that I think will be able to satisfy many of the questions that you may have. And so we are going to have the next panel discussion about the exploring market makers tactics for ETP trading.
So we have looked at the ETP trend, about the investment trends. Now we're going to be exploring market makers' tactics for ETP trading. And the moderator is of course going to be leading the discussion, and we are going to have 3 panelists. And so exploring market makers tactics for the ETP trading panel discussion is going to be moderated by Sumin Park of Shinhan Asset Management. And we have Hee-Jun Kim of the Flow Traders, and Mr. Tom Bailey from Optiver, and Mr. Jonathan Kwan of IMC are going to be participating as our panelists today. So Sumin Park, ETF analyst at Shinhan Asset Management, will serve as the moderator. Good afternoon. My name is Sumin Park of Shinhan Asset Management. I want to congratulate KRX for launching the ETF market 20 years ago. And I've been in the ETF market since 2010. And for the past decade, I was able to see the growth of the ETF market here in Korea and personally. And I hope to see the growth of the market as well. We have equity as well as thematic ETFs, as well as global equity ETFs, as well as ETFs with different currencies, and fixed income and alternative asset ETFs are also becoming widely available. Asset managers, index providers, liquidity providers, and exchanges. I mean, they all need to work together for the ETF market or the ETP market to successfully operate. Now, not just the asset managers, but also liquidity providers, well, their roles have become very important. But the environment, I believe, is quite challenging. In the past 2-3 years, we've had many ETFs that are linked to international assets. And we have seen more need coming from the Korean investors. And so the international market makers' roles have become very important. And today, in the last session of the conference, we are going to be talking about the challenges that the international liquidity providers are looking at.
Today, they are all from global market making firms covering not only ETF, but also all the different kinds of assets. Before we move on to the discussion, let us hear the introduction from the panelists. Mr. Kim, could you provide a brief overview of your company and introduction of yourself?
네, 안녕하세요. 저는
Good afternoon. I'm Hee-Jun Kim. I'm the senior institutional trader from Flow Traders. I'm also the country manager of the Korean office. I will speak in English later so that other panelists can also hear me. We are an ETF market maker, and we provide market making services for almost all listings of major global exchanges, bonds, FX, cryptocurrency, and other asset classes are being traded by our support.
Provide us your introduction.
Good afternoon, everyone. My name is Tom Bailey. I'm the head of ETF trading for the APAC region at Optiver. First, I just want to say thanks to the KRX for hosting the event and having us on as a panelist. Optiver is a global proprietary market-making firm. We were founded in 1986, And while we are most famously known as an options market making company, in the last 10 years we've had an increased focus on Delta 1 products, so equity and ETFs in particular. At my role at Optiva, obviously leading the ETF team, our mission really is to provide liquidity to ETFs throughout APAC and to support the growth of the markets through improvements to the market structure.
Thank you. Mr. Kwan?
Good afternoon, everyone. Thanks to the KRX for having us up here. My name is Jonathan Kwan. I lead the Korea ETF desk for IMC. IMC has also been around for more than 30 years, and we're a global trading company. We trade in over 90 exchanges around the world, from our offices in Amsterdam, Sydney, and in Chicago. Particularly for the ETF market, we focus from Sydney and from Chicago, and we trade in Japan, Hong Kong, and Korea, primarily in market making the ETFs. And so again, like Optiva, similar, our aim is actually to provide market liquidity for the markets in every product we trade, and to do that in a way that makes the market more efficient.
Thank you. Let us begin with the first question. It has been 20 years since Korea ETF market was opened, but I think it is quite recent that foreign market makers have begun to play a meaningful role in Korea. So, Mr. Kim, could you talk about how the ETF trading landscape in Korea has changed with foreign market maker?
Yes, I've done this panelist at this conference several times now, and the last time I did was in 2019, I believe. Between now and then, there has been a huge difference in terms of the roles that we are playing for Korean ETF market. So back in 2019, we were already trading ETFs listed in Korea, but we are not really market making those products. We are trading those ETFs opportunistically more. But after COVID-19 outbreak, things have changed, as some of the issuers in Korea started to plan to launch some overseas market exposure ETFs, like China theme ETFs. And the first one was China electronic vehicle, and back then there was already an ETF listed in Hong Kong Stock Exchange that was following exactly the same underlying exposure from Hong Kong. And we flow traders were the lead market maker on the product, so we were already trading such underlying a lot from Hong Kong. So I was one of the 14 market makers to start discussions with local ETF market participants like ETF issuers and local LPs regarding how to get the such investment exposures and how to hedge them. And on the first day of the ETF launch, we played a decent role on the market to help the ETF to be traded smoothly on the exchange from the day one when the ETF didn't have much liquidity on the market. After that, there have been a lot more ETFs that have 14 underlying exposures and 14 theme underlying exposures as well. And we have been very actively participated in the initial discussions for the launch of those ETFs and how to trade those ETFs, how to help the local ETF market to have better liquidity on those products, and how to tighten bid-offer spreads for investors to trade those ETFs in Korea. And here we are now. I and our company have deep relationships with local ETF participants like ETF issuers and local LPs and other ETF participants. And we are actively market making and trading ETFs listed in Korea. We try our best to help to provide better liquidity and to tighten the bid-offer spreads for some of the ETFs that have less liquidity in the market. So I guess that's the biggest development for 40 market makers like ourselves to be participated in the local ETF market recently in Korea.
Thank you. I think as the foreign equity ETFs are deeply going into our market, I think it is very necessary to co-work with foreign market makers since they have broad asset coverage. Along with the current environment I've mentioned in the opening, such as increasing popularity of foreign equity tracking ETFs, active managed ETF, and lots of thematic strategies. Mr. Bailey, what are the challenges you have faced under these circumstances?
Yeah, I think first I'd say it's really impressive to see over the last 2 years the growth in the foreign and thematic ETFs. If I look across other markets in APAC, it's quite clear that the appetite from investors is there and really strong, and also the level of innovation showed by the asset managers and the exchange to support these products has been really impressive. So really exciting to be a part of that from a market making point of view. Moving on to the sort of the challenges of trading such products, I'd say there's probably two things which are quite unique to Korea that I'll bring up. So the first one I think is the treatment of taxation for foreign tracking ETFs. So there's currently the capital gains tax, which is applied based purely on the trades in the ETF itself. And obviously, most market makers will hedge their ETF exposure with a future, say a CME listed future to hedge their delta exposure. And the taxation is levied on just the P&L generated from the ETF trade, not taking into account the futures hedge. So what you end up with essentially is a position which may not be profitable, which you have to pay tax on. And so this is something that I think I do see as long-term a bit of a roadblock to some of these foreign ETFs, and so I think it's something that's definitely worth having a good think about. The second one, which is also unique to Korea, but we do see it in some other markets in Asia, is creation and redemption. So creation and redemption is obviously really the mechanism which enables market makers to keep ETFs trading in line with their fair value or their NAV. And so when you take that mechanism away, or you weaken that mechanism, then you'll see ETFs trading further away from their NAVs. And from a market efficiency point of view, we don't really like seeing that. We like seeing investors get as close to fair prices as possible. So specifically, in Korea, creation and redemption is not open to everyone all the time, and that's something that we would like to see over time improve. And so I understand that there are some sort of structural constraints there, or things that make that difficult for asset managers to allow everyone to create and redeem, but we think it's the right direction for the market long term, is to allow everyone to create and redeem all the time to contribute to an efficient market.
Thank you. I think you have some comments on PCF, Mr. Bailey. You have comments on PCF things?
Yeah, so I guess, the other point there would be, I think it's a challenge we see in a lot of markets actually around the disclosure of the PCFs, or PDF is often called here. So this is particularly important for foreign ETFs where the fund structure is actually quite complex. You have ETFs holding overseas listed ETFs with FX hedges, or even leveraged FX exposure. So you see more varied fund structures, and to support those fund structures, the PDF needs to have a greater level of detail to really show the market maker, here's how you can price and manage your risk correctly. So that's really the cornerstone of a market maker's role, is to be able to price the ETF, and a lot of that will come from the PCF or PDF. And so there are we see a lot in Korea, and it's not just Korea, it's also, we see it in Japan as well, where the actual real contents of the fund is not disclosed in the PDF, it's more indicative, here's what roughly it is.
Okay, thank you. As the structure of ETFs is becoming more complex, I think all the basic things such as PCF, which we coded as PDF in Korean market, and creation redemption process are needed to be improved for the better trading environment. Then, Mr. Kwan, what can we improve to facilitate providing liquidities? And do you have any suggestions for the Korea ETF market?
Yeah, I think first thing to mention is that there has been impressive growth in the Korea market for ETFs. I think we heard earlier that now there's over 600 ETFs on the Korea ETF market, and I think it's about 3 trillion won of daily volume. So it's quite impressive. I think for us to continue that as market makers, we want to provide efficient markets. I think one of the things that is quite unique as well to Korea is that actually a lot of our ETFs actually trade under the net asset value. We believe this is due to the sell-side stamp duty which exists on securities or the stocks, which provides this kind of unique environment. Something that has happened in other markets is, and it's kind of linked to what Tom was talking about with creation and redemption, is that they've actually looked at providing better incentives for market makers to continue to tighten that spread and provide that liquidity. So one thing they've looked at is actually removing the need for market makers to pay stamp duty. For example, in Hong Kong, they're doing that in linking that with creation and redemption. So if you're doing creation and redemption, that you can actually you're exempt from paying the stamp duty on the stocks. So that's one example of something we can do more for market makers. I think another thing that we can look at is also diversifying maybe the underlying. ETFs are a great way for controlling leverage or using leverage, and we trade a lot of leveraged and inverse ETFs as well as the vanilla ETFs out there. So maybe there's also a possibility of, we're looking at this as well as like providing more leverage. So at the moment you go up to 2 times. I think the KRX has recently approved 3 times for an ETN. We kind of applaud that kind of direction in the ETNs and the ETFs. I think the third point that we'd like to make is that I believe the KRX is looking at or considering night markets for the derivatives markets. Potentially that is something that we can consider for the ETF market. It's just it's an idea, but it's something that maybe could help also with some of these more foreign listed ETFs, maybe with the hedging that we need to do in the futures and other products. So it provides a more accessibility for us as market makers.
Okay, Mr. Bailey, would you like to add something for the suggestion to Korea market?
Yeah, so one other thing I'd add, I think those are good suggestions. And the other one that we've seen happen a bit throughout Asia is sort of revision of tick tables. I think Japan, it was a year ago, Hong Kong a couple of years ago, where the tick sizes were sort of reviewed. I think it's about the right time in Korea to do that as well. Generally, we see a neutral tick size for an ETF being between 3 and 5 basis points. When it starts to go above 10, investors are really paying or not getting as good a price as they could otherwise. And when tick sizes start to fall below 2, we see liquidity really drop off, and it's harder for investors to get executed in the order book. So I think with the 5-1 fixed tick size for ETFs that we have now, a lot of ETFs when they get listed are actually in that good zone of around 5 basis points. They typically get lifted at 10,001, which is great to see. However, obviously, as the prices move over time, that 5-1 tick size may end up not being too sensible. And so we have some big ETFs that are trading around 3,001, some around 40,000. So I think it's a good thing to look at. I think we can make a simple change there just to try and keep that tick size between that sort of healthy range so investors are getting good prices.
Okay, thank you. I remember that in 2018, KRX once have tried to suggest the exemption of withholding tax for the ETF liquidity providers, but it has not been adopted yet. So thank you for your great suggestions. Lastly, I remember that in KRX conference in 2019, right before the COVID, this issue was touched, off-screen trading of ETF. It has been a main trading method overseas market, but in Korea it is kind of rare. So, Mr. Kim, could you briefly talk about this and how do you think it brings the efficiency to the market?
Yes. So off-screen trading, I want to mention two different things here. One is OTC trading, which stands for over-the-counter, and the other one is RFQ platform. So the first one, OTC trading, it's not possible in Korea, but it's possible in all the other major ETF markets like US, Europe, Singapore, Hong Kong, and Japan. So OTC trading, it's a trade between an institution and a market maker like ourselves. And if a foreign investor wants to invest in Korea-listed ETFs, then they have to trade either on exchange or via K-blocks. They cannot just do OTC trade. And in order to trade those ETFs on exchange or via K-blocks, they have to set up a trading line and have an account with the local broker. But the process can be quite complicated, difficult, and time-consuming. So those investors may just go to an MSCI ETF, MSCI Korea ETF listed in the US or listed in Europe, and just do OTC trade and have the investment exposures. So if OTC trade is possible at KRX as well, then we may be able to bring more foreign institutions' investment flows into Korea-listed ETFs that may help local issuers to increase their AUM, which may further help the liquidity of local listed ETFs. And there's one more thing I want to talk about, which is RFQ platform. But I believe Jonathan has something to talk about this topic.
Yeah, I think just following on for what you're saying there is, sometimes large institutions, we mainly trade on screen, but sometimes large institutions want to trade larger quantities of ETFs, and you may want to do that directly with the market makers like ourselves up here. I think providing a request for quote kind of platform, which, for example, in Japan, they recently introduced this. It just provides a place where market makers like ourselves can provide pricing for larger block trades of ETFs, which are not necessarily on screen. And I think that just provides a place where we can get the right pricing.
Thank you. It has been a very over time to hear the challenges market makers are facing now and their suggestions to Korea market. 오늘 굉장히 짧은 시간이었지만
I know this was a very short period of time, but we were able to listen to the opinions of the global market makers, the liquidity providers. And I realized that there is a room for the ETF market to grow. In terms of products, there have been excellent development, but for the products to be truly successful, those products have to be well traded. And the trading should be done based on the fair value. And because that is going to be determine the quality of the ETF product. And that is why the role of market maker is very important. And investors, when they look at ETF products, well, they have to make efforts to better understand liquidity and market making. For the liquidity and about the efforts that are being made by the liquidity providers, the cost that they shoulder. So if investors have such knowledge and understanding, I think that our ETF market will be even better than it is now. And we have received some questions.
Are the questions? So let me ask this to you. Is there any unexplored areas of the market having bright futures in terms of ETF product? Anyone to answer to this question?
Let me start first for something. Well, a lot of people will talk about crypto ETFs. definitely. We, as a market maker, Flow Traders is trading a lot of crypto products globally already, and there are a couple of discussions on cryptocurrency ETFs all around the world. And there are already a couple of ETFs in Europe, and there was an announcement from Hong Kong Stock Exchange, I believe, today, which is not fully confirmed, but they will discuss cryptocurrency ETFs going forward. I'm not sure how this is going to happen in Korea. It's going to take a lot of time, of course, due to regulatory reasons and many other reasons to figure out. But that's certainly something for the future of the ETF market, I believe.
Anyone?
Yeah, I'll jump in. I think an interesting one, if you look at the US market and compare it to Asia or Europe, I think fixed income plays a much bigger role in the US than it does here in Asia. And I think it's interesting to think about, especially at this time, we have the inflation coming back, fixed income is coming back in fashion somewhat. And so, yeah, it's an interesting time to ask ourselves, what fixed income products can be listed out there? Because, I think in Asia, in terms of turnover, represents just a drop in the ocean compared to equity. So I think there's definitely opportunities there for asset managers who are willing to invest in that. And I would say for the foreign ETFs, I think there's still a huge amount of potential in that segment, and largely because a lot of the flows into foreign assets is currently going into US-listed ETFs, and that's from Japan, from Korea, and so I think there's a huge opportunity for the local asset managers to keep tapping into that flow and create liquidity during Asian hours, where the local investors can then get good prices during their hours rather than waiting to the US session. So I think those two areas, fixed income and continuing to develop the overseas underlying liquidity, will be a big opportunity.
Okay, thank you. Mr. Kwon, do you have any comments on this?
Yeah, I mean, I tend to agree with what's already been said in terms of at least the crypto and the fixed income and foreign ETFs. I think just to, I suppose, in terms of our role as market makers, for us, we're trying to provide liquidity. I mean, generally, as I think Tom mentioned before, when we trade these ETFs, we also need to hedge. And I suppose there's another thing that we look at when we look at some of maybe the sector ETFs and foreign ETFs, is that we need to think about our hedge in the futures. So something that was, for example, in the sector ETFs, you have some of the battery or the metaverse ETFs. They do have an associated future associated with some of these, I suppose, the underlying. So for us, it's also about finding the right hedge. So continue to develop that as well as I think important for us.
Thank you. 지금까지 이제 저희가 준비한
So we address all the questions that we prepared, and we'll see if there are any questions from the floor. If you have a question, please raise your hand.
네, 질문 더 없으시면
Is there a question? Hello? So I learned a lot from today's discussions. Up until the fourth session, nobody asked any questions. I don't think I have a lot of knowledge to ask any technical questions, but rather my questions are rather simple. I have two questions. This question is directed to the Korean person. All the stock-related terminology is really important. If we say index, it is translated as 지수 in Korean. But if we say 지수, it doesn't really translate. And we want to have more easy to understand Korean terms so that it is understood better by Korean layman investors. In the capitalist world, stock tradings or EFT tradings are sometimes regarded by or regarded as gambling. I'd like to seek your opinion on this. Any one of you can answer my question. Thank you.
시간이 많이 없으니까 제가 그냥 한국말로
Since we don't have much time, I will answer all your questions in Korean. And so let me try to answer your two questions. In your first question about terminology, I think you're asking us to explain more easily the index products. Well, index is as it says, index that helps us to look at the market easily. And KOSPI 200 is the most well-known index here in Korea. And so the large market cap companies, the 200 of them are compiled into what's called the KOSPI 200 index. And so this index shows how all these companies are moving at the same time, and it's not showing individual companies' stock price movement, but rather how the whole market moves. So that's what index does. And we have an ETP product that helps you to be able to invest into index. And we are market making for those sort of products. And about you said that there's a lot of fraud in the ETP market. I don't know where you got that information. Well, ETF, the product, tracks index. And so we market makers does the hedging against the underlying assets, and we also provide quotes. So on the investment exposure to the underlying assets and then the index, there is some disparity. And when where there is that disparity, we market makers try to correct that disparity very quickly. I really do not know where you get the information that there is a fraud in the market.
The ETF market is growing quickly, and from the asset management company's point of view and from the market maker's point of view, of course, we always want to improve our communication with the investors. There are so difficult terms and a lot of jargons that are used in the industry, and a lot of times we don't provide sufficient explanation on what we are doing or on the terms that we use. Now that we have a lot of retail investors that are purchasing ETF products, asset management companies must work harder in order to explain what the structure is, how those products are traded. And I think we just began our efforts to better communicate with the retail investors. So I hope they will continue to see more engagement of the AMCs with the retail investors so that we can build more trust and confidence among various market participants. So it's going to take some time, but please continue to provide your support. Now that our time is up, we'll have to wrap up our discussion session. I'd like to once again congratulate you on the 20th anniversary of Korea ETF. We'll work even harder so that the Korean ETF market will be further advanced. So thank you very much for kindly moderating the session, and this session was once again very successful. So now we are finally at the end of the Global ETP Conference Seoul 2022, and to celebrate the 20th anniversary of Korea ETP market, we organized this year's conference on various themes, and the discussions that we had today will be or should be useful for the next decade of the advancement of Korea ETP market. We ask for your continued support for the Korean ETP market. Once again, I'd like to thank all the speakers and panelists for their kind contribution, and we hope to see you again next year. With that, we will conclude Global ETP Conference Seoul 2022. Once again, thank you all very much for your participation.